Good morning, traders. Anthony Crudelli here, and welcome to Ninja Trader Live here on Veterans Day. First off, thank you so much to the veterans out there. We appreciate you deeply. Thank you for everything you guys do for us. If you're a veteran in chat, please let us know. We want to say thank you in the chat as well. Joining us in studio, Tracy Schuchart, senior economist, otherwise known as Shy. Good morning.
Good morning, all.
Macro strategist Craig Shapiro. Good morning, Craig.
Good morning.
And that good-looking stud on the big screen, my man, senior market strategist, Jimmy Cagnana. Good morning, Jimmy.
Good morning, and a happy Veterans Day to our brave and courageous servicemen, and a special shout out to Mrs. Caggs. Thank you for your service.
Oh, that's right. A special shout out to Mrs. Caggs. That's great. And do we have any other veterans on the team? I don't think so. No, I mean, the generation before us, man, they were much thicker skins. They were tougher, man. They went out. They all went in. My dad was in the military. He talks about it all the time. He was a Navy guy. I mean, my dad's going to be 81. He still talks about it all the time. He loved it. It's one of the things I go back. I didn't go to college either. So, and I would have liked to have done that for the military. Instead, I was on the trading floor as a runner, hey. So anyway, good morning, everyone in chat. Hopefully you guys are all having a good morning. Go ahead, Jimmy.
But you did grow up in the mean streets of Melrose Park, though, so we got to remember that.
I did. It was kind of interesting. Well, how do you think I got this hairstyle? It's a pretty dominant Italian neighborhood in Chicago, West Side, western suburbs. We'll have that talk a different day. Shy, the news.
All right, so we are one step closer to the government actually opening up. So there is a chance that it actually opens up by Friday. The Senate passed the temporary funding measure last night, 60-40. This now goes to the House. Johnson has given the House 36 hours to get back to the Capitol to vote on this, and so they are expected to vote on Wednesday. Now there'll be two votes. First there's a committee vote, and then there'll be the actual vote. And then if that is approved, that goes to Trump to get signed, and then we have the government open again. That said, it still could take days for air travel to return to normal, and probably longer for people to get their SNAP benefits that have been delayed, and lengthy backlogs in the data coming out. So schedules will not be 100% back to normal even after the government opens as far as the data is concerned. Next, we have SoftBank revealed that they had sold their entire NVIDIA stake in October with a gain of $5.83 billion on that trade. They said I can't say if AI is in a bubble or not, said Chief Officer Goto. During the earnings conference on Tuesday when this was revealed, SoftBank sold NVIDIA so that the capital can be utilized for our financing, he added, without elaborating. So they are out of NVIDIA entirely. This morning we had U.S. small business optimism slips to a 6-month low on earnings. Optimism declined about a half a point to 98.2. This was dragged down by less optimism about the outlook for the economy. And there was also notable in this a small decrease in hiring plans over the next 3 months, marking the first decline since May. Now, let's talk about what's going on in the markets. Now, volatility might not be out of the markets besides the insane grind higher that we had yesterday. First off, the banks are closed today. It is Veterans Day and the cash bond market closed. So that could affect markets. Also, we had Goldman Sachs came out with their CTA flow estimates. And once again, we talked about this last week. We talked about this last week and what they thought was going on. So they say CTA length continues to be elevated, but they sold $4 billion in global equity exposure over the last week, and they expect CTAs to still be smaller over this next week and the next month within U.S. indices. They are looking for a S&P to retrace to 6705 this week. So we'll see if that happens.
They look for it this week to go back there?
Yes.
Got it.
Right. And last week they literally called it last week too. So they just saying that this volatility still might be in the markets. Also, we have the dollar carry trade set to trounce the world's booming stock market. So the dollar is regaining its crown as one of the most appealing assets. And this is via the carry trade. And carry trades can drive massive capital flows, kind of reshaping asset values and influencing sentiment from New York to Singapore. Basically, the trade is investors borrow cheaply to chase higher returns elsewhere, particularly in something like borrow against the yen, to buy dollars, etc. That said, when investors do place this trade and try to chase higher returns, liquidity is often amplified. This fuels rallies in risk assets that can unravel just as quickly when volatility spikes. So that's adding to a little bit of pressure in the volatility in markets. Then we had Michael Burry says Oracle and Meta are wildly overvalued. He posted this on Twitter, or X, yesterday. And basically, the gist of why he's saying this is that he thinks that
he's short.
Well, that he's short, but he thinks that they're misrepresenting the depreciating value of their chips, and that they're carrying that on their books much longer than they should be, and that's inflating their bottom line. So really it's about the devaluation. So we'll see, but he thinks it's overstated by 176 billion with a B dollars between 2026 and 2028 with what they have on their books. So
I mean, that's not even that much for them, to be honest. Is that between the two companies you're saying?
This is between, well, he didn't say exactly which company. I think he's saying Oracle and Meta in this particular calculation, but he also thinks that this is across all the hyperscalers, so Alphabet, Oracle, Microsoft, Amazon, etc. Then we have the trade war might not be over. China has devised a plan to keep the U.S. military from getting its rare earth magnets, which is really the big push. What the United States wanted rare earths for China for those military purposes. So China plans to ease the flow of rare earths and other restricted materials to the U.S. via a system that's going to exclude any company with ties to the U.S. military. So we'll see how that all pans out and what the U.S. response to that will be.
Yeah, I'm interested in I mean, look, everyone tries to give Michael Burry, kind of crap because he's he had the Big Short right, which was kind of a big deal, right? And look at it again. It's also proof that traders are wrong more often than they're right, and so you're right.
Yeah. When
you're right, you capitalize on something big. I'm not saying he's wrong on this, but I was trying to calculate, between the two companies, how much he's saying their revenue was. Oh, I just want to kind of get that right, Shai. What was it for the 176 billion?
All right. So he says he estimates that this longer depreciation schedule will result in earnings being overstated by some 176 billion between 2026 and 2028, with Oracle earnings overstated by 27% and Meta by 21%.
All right, yeah, that is.
So earnings, yeah.
Yeah, all right. I was trying to figure out. I'm like, what? They're both what $1 trillion companies now? I mean, it's like what's 100 billion is between the two of them, it's nothing.
Yeah.
But kind of thoughts on that? Because I think it's a big topic out there.
Look, I think we've been talking about it. Like the narrative on the AI CapEx story is shifting. We've been seeing it shift over the course of the last few weeks here, particularly as Meta Oracle have had to hit the debt markets. Google did a debt deal as well. And so increasingly people are focusing on the fact that these investments which were originally made with internally generated free cash flows are now needing to be financed with borrowings. And so to what extent are the returns associated with these investments going to be profitable enough to justify the investments? And so you're seeing a little bit of a shift here. And some divergences, right? Meta has been pretty bad. Oracle has completely filled the gap from the big move higher in September. Amazon still holding in there okay. Google okay. Nvidia basically okay. So I think investors are going to now have to, instead of unilaterally just buying AI capex and buying that story, are now going to be a little bit more differentiating in kind of what they're doing there. And so maybe it makes it a little bit more difficult for the entirety of the story to keep moving higher. There'll be some differentiation in the names. We're seeing this morning CoreWeave, which is kind of a, it's more of a rental play, right? They buy GPUs from NVIDIA, rent them out for people to use to, do inference and do LLM training and the like. And the stock's getting hit pretty good pre-market, down 7-8%. And so, again, there's a differentiation in the story. It's not just kind of a one-way train.
And their earnings, too, were a solid beat, and they tanked right after.
Yeah. Well, I mean, again, I think you look back at the last 2 years, the rallies we've had across the board, and again, you look at back what happened this year with the early slam, and then now we're into the end of the year. Again, I think this is a bigger lead into what happens next year, as far as I'm concerned. Again, I don't think that the indexes are too bothered by this still. I mean, obviously. I mean, who was the one that called for 57.05 this week? What did you say that again?
No, 67.05.
67.05.
67.05 was Goldman Sachs.
Yeah.
Because in all of their scenarios, CTAs will be net sellers in the S&P 500
this week. It's pretty
week
interesting to hear
still.
them say a weekly call. I mean, you don't hear a big bank like that talk about a weekly call. And again, I just think it's volatility into the end of the year, probably still relatively higher. And I think more of a story comes into next year as to how much do you want to, I think the flows, I know the flows, they matter. It's all about the flows, man. I just look at it and go, yeah, I mean, the indexes continue to kind of take this stuff on the chin. And I look at it more from an index perspective than an individual stock. I think individual stocks, they can do anything. But when you look at it from an index, I think this is, the index itself is unlikely to be too bothered by this. I mean, yeah, you might get a 130-point break lower this week in S&P that Goldman's calling for. I don't think it changes much. I mean, that's not even still 50, 60 points off of last week's low, whatever it is. So, I mean, again,
But it's still good for traders.
I think it's great for traders.
Right? Because we're starting to see a little bit more volatility in the market instead of just that consistent grind higher.
Yeah. All right, Jimmy, we're going to go to you. We'll go over the tape a little bit here. We got S&P this morning down 11, 68.45 and a quarter. NASDAQ at 25,625, down around 90. Russell down $3 to 24.60. Dow was 47,500, up 41. So they're buying the industrials today. The flows. All these little code words out there. Natural gas is down one tick after this rally. One tick, folks. It's exciting. It's even now. 4.338. Somebody just bought the offer to make me look wrong on live air. I'm sure it's the case. Crude oil is up 41 ticks, 60.54. We get down to 57.50. I will be a buyer of crude oil into next year. Again, I think that story is. I can't wait to talk to Sam today from Tanker Trackers. My guy, man. I've known Sam for a long time, so I'll be interested to talk with him today. I think crude oil, again, becomes a story end of this year into next year. Gold up $24 again, 41.46. Great two-way tape for traders. Still think there's an underlying bid in this gold market that could take us up to the new highs for this year. But even if it doesn't, it's been an amazing year for gold. You could be short, just don't overstay your welcome being short in gold. We'll see what Jimmy sees in the charts. Metals across the board, doing okay again this morning. Silver's almost to 51. It's at 50.91. And platinum's at 16.12, both up. Close to 1% in platinum, over 1% in silver. Dr. Copper's at 5.08, down 22 ticks this morning. Bonds this morning, flat, not really even worth talking about. When you got the cash bond market closed, it's like, whatever. It doesn't really matter. And you look at currencies, pretty much flat as expected. You got banks closed, bond market closed. Not going to be something we watch for today. Don't put your guard down, though, everybody. Just because it's a holiday does not mean something can't happen, and it doesn't mean that it won't be busy. You know, it's easy to come in and go, oh, I'm going to come in and I'm just going to do this, it's going to whatever. No, stay mentally focused.
Yeah.
Every day for the trader is the Super Bowl, bottom line. Jimmy, what did you see overnight?
Yeah, no, that's a great comment. You know, on days like today, where it's like maybe there's not a lot of institutional participation in a lot of the asset classes, you know, I always come into these days adjusting my expectations. There are opportunities, there's risk for sure, but I want to be a little bit more patient on my entries and probably, unfortunately, have to kind of be careful where I put my stop, maybe give myself a little bit more breathing room because of the non-institutional nature of the day and the kind of, I don't know, choppy, unexpected price surges that we could possibly have here. But so the other thing I like to look at is what are the markets to think about today? Well, we have a relatively newcomer, right? We have the Bitcoin, right? And this, again, is traded, you know, and the weekends even. So there's going to be some movement here on the Bitcoin. I'll cover that in the Edge report as well. So I'll be looking at that, and then I'll be looking at the metals markets. I mean, the metals markets are going to move today as well, and you can see it in silver and gold. So just today's a unique day. Be careful. You know, your regular process, you might have to kind of think about a little bit and be more patient would be my advice.
Yeah, exactly, Jimmy. I mean, if you're up a little in the morning, down a little, and it's not going your way, you don't force it. But if it's busy, you got to treat it like every other day. I mean, that's the way I look at it, right? I mean, I've never loved how the exchanges work these out. It makes no sense to me. If you have banks closed, desks are closed. I mean, bond markets, the desks are, you know, I don't even know what percentage of how much they represent, but you got to imagine if the big banks are closed. I mean, what are we doing here? You know, it is what it is. I mean, it's not a holiday, but it kind of really is a holiday. And so I look at it and say, just again, don't let your guard down. That's what's important. A big lineup though today, though. We've got Samir Madani, Tanker Trackers, my boy. Love that guy. Sam is great. Can't wait to have him back on. I haven't seen him in years. I got to see if who's got more gray now, me or him. I'm gonna bust his chops. He's a good dude, man. And I'm guessing he's more gray than me. That's my guess. He's up. Sam is one of those guys. He's working around the clock. He's a great dude. And we've got T-Trades today, which is great. Love his Tuesday segment. And we've got Merritt and Christian. They're going to be on today as well. And then we've got Leo. But we do have someone else who's in the studio who really needs a special shout out. You know, you guys look at, we build stars here at NinjaTrader Live. We don't talk about that. It's not just here, you know, what's in here and the traders that come on. Well, we have stars in the background, and here we have is Peter in production. If we could pull that picture up of Peter, and they're going right to me. There he is. Look at, I mean, if he isn't ready to star in his next Hallmark movie, I don't know who is. I mean, look at that. He is geared up here in Naples, Florida. He's got the flannel on. He's got the beard perfectly trimmed. He will be, just tune into Hallmark movies this weekend, and you will see Pete. He will be in there. It's a guarantee, right? I was over by my mom's the other day. My mom, my dad. It's the middle of the day. It's in Naples. It's like 75 degrees out. They're sitting on the couch with a blanket. They're watching Hallmark movies. Her and my aunt, and they're laughing their ass off. I go, this is the dream. This is the dream. And I said, look, yeah, make sure you look for Pete from production. He will be in there. But Craig, back to you. What else did you notice overnight, and what are you looking at coming into the day?
Like, I think we have, with the government opening or reopening, let's say in the next couple of days, we are going to finally get the resumption of data, right? I think this market has been complacent with the lack of data, basically saying, you know, no data is a good thing. You know, no reason to be concerned. Sell volatility, markets have been able to keep it together, grind higher. I think the administration is starting, not subtly, but, you know, is reminding people that the fourth quarter has been pretty bad. Hassett was out over the weekend basically saying we could be in a technical recession in the fourth quarter. Besson has been out talking about the slowdown in the economy, you know, casting blame on Democrats and on the government being shut as a reason, right? I think they're trying to craft this narrative about the weakness in the data that they know is there and that we're about to find out about. And so, look, is it going to matter for AI CapEx? No, right? That still is the story. But for the rest of the economy and the rest of the sectors, it's hard for me to see that we're going to, you know, get that breadth expansion into the end of the year, particularly when so many of these sectors have been under pressure, are likely tax loss candidates for sale to the end of the year here. So I think as we start to get that data, it's going to become increasingly clear that a larger part of the economy really isn't doing very well. And so, we're going to hear about the government reopening, but it's only going to be reopened now until January 30th. And so we're likely to have a situation come January where we're going to be talking about a shutdown again. And so if you're a low-end consumer or just got your, or your government worker, you just got your paychecks back, you're going to go out and spend, you're going to be like, oh, crap, I may have to do this again in January. And so I don't know if we're going to get a confidence restoration from this government being open. I think there'll be a relief that it's open. But, momentum for the economy outside of AI CapEx is waning. And with the narrative shifting on AI CapEx to a debt-financed one, again, I think we're talking about these headwinds for 2026, which, right now maybe aren't such a big deal. But, as we start to push through into the end of the year here, we may start to see, some of the strength in the tape just kind of, languish a bit as people start to gear up for next year and what doesn't really look like a great start to the year.
I agree with you. I mean, I think the indexes stay steady to probably higher into the end of the year. And I think that it's going to be interesting to see what happens when we get some of this data and how that all looks. Again, I go into next year. I think, not to get too far ahead of ourselves, but the way I just seen this movie before where the markets are so strong, you come into the end of the year and you start seeing these little cracks that we've been talking about, and the market just goes, hold my beer, don't worry about it. And at the end of the year, everything feels, all rosy and warm. I'm curious to see what the shutdown does with, like you said, with the paychecks into the retail season. They probably get hit a little bit, or he comes into January and all of a sudden it's just, nobody's buying anything. And that's the kind of scenario I've seen in the past. That's what experience has taught me in the back, where it's like you have these strong years, everyone's up, it feels still like FOMO, the end of the year ends strong, and then all of a sudden January, everyone's sitting there like this, and there's no buyers, and everyone's like, well, what the hell happened? I'm not saying that's what's going to happen. I kind of think that's what it is. I also think that that's why all of a sudden you look around and then energy starts catching a bit. That's just my guess. Shai, what were you going to say?
Yeah, I mean, we already had Besant coming out this morning saying that, a lot of heating costs are high still. And so I think they're
about to get higher.
They're about to get higher. So they are worried about it, and they are acknowledging that is there. I did want to clarify one thing about this bill, because we kind of had talked about it before a little bit, but all federal workers who were furloughed and denied pay during the government shutdown will get paid back in full.
Yeah, and rightfully so. Yeah, good. All right, we're a minute and 20 before we go to Jimmy for this morning's Edge Reports. Final thoughts, Craig?
I'm watching gold again here. I think, we've been talking about this digestion period after the blow off and kind of correction. It's been buying time. It's starting to find its sea legs again here too. I think gold anticipates the sluggishness in the economy, the need for reflation, the need for more liquidity that's going to come next year. And so I think as we start to get the data in the coming days and weeks here about deterioration in the labor market, sluggish retail sales, a variety of things, gold's anticipating the need for the Fed to be more actively cutting rates next year. And so I'm watching gold. I think gold is, maybe it's had its correction. I've been buying some upside calls in gold here for next year. I just think, volatility's come back down again.
You sicko.
And, it's a core part of the story for 2026.
Yeah, gold will be the one that I wonder how they react if equities do really pull back, like really pull back. Not 2-3%.
I got that taken care of too, though.
Yeah,
with my equity view.
Exactly. It's because he's short. Shai, just 10 seconds left. Any data, anything still today?
No, we have no data. Very light on data this week. Even if the government does open, we will not get CPI or PPI this week.
Got it. Okay. They're asking about Bitcoin. I will go over Bitcoin. T will go over Bitcoin.
Sorry, real quick. ADP did just come out with their data for the weekly report. Lost an average of 11,250 jobs in the 4 weeks ended October 25th. So that seems like they're providing weekly data now with the government data coming out, and so it looks like some sluggishness there. I think futures got hit a touch on that. That just came out a minute ago. I just saw that hit.
Yeah, it did. What were you gonna say? Anything, Shai, on that?
Yeah, they do it on a 4-week rolling basis. That was just what I was going to add.
Yeah, S&P broke a little bit. NASDAQ broke a little bit as well. Russell, everyone on the overnight lows. We'll see if Goldman's right this week. 67.05.
We'll see.
Not so.
It might be worth to buy a couple puts just to, play around. Just to see. All right, it's about that time, everybody, for this morning's Edge Report. Take it away, Jimmy.
All right, well, let's start with the Bitcoin. I was talked about it earlier today. This is a market, remember, it trades 7 days a week in the cash side of the markets. So today might not be as unusual as you think going into the holiday. It's we're having a hard time recovering, right? We had a peak high back here on the 6th of October, and then a swing low, a lower swing high, a lower swing low. So this is suggesting again some downward pressure in this market. And if you consider this a swing high, where we're at right now, then another lower swing high. We have a really nice area of support resistance here at 106,500. We're kind of stuck right against that. The 80 MA is below it, price is below it. It's also below the 23.6% fib retracement from peak to trough. Stochastics are kind of weak as well. We have longer term support down here around that 100,000 level. You can see buyers wicks coming in recently, and we saw that earlier in the calendar year. Intraday, we do have a really nice kind of, sell-off going on. We lost a VWAP in the rear view mirror around midnight, and we kind of stabilized recently. I mean, look at this point of control. Just about every single one of my 30-minute candles have traded at that price point since about 1 o'clock in the morning, 1 to 1:30 in the morning, and that's 105,375. We finally broke down a little bit, and we're below yesterday's initial balance. We just tagged that S1 right now, and then previous session's lowest in sight as well. There are some targets on the downside. Menthor Q has a really nice one-day min target down here at 103,560, we'll call it, and then S2 right below that. So there's some good downside targets. There's even a blind spot here. These Menthor Q blind spots are pretty interesting as well. 102,415. So we do have some targets down on the downside. Upside, there's a whole bunch of targets, including JAX1, JAX4, high vol level, and JAX2. So right now, though, looking like a lot of downward pressure here on the Bitcoin. Let's shoot over to silver, though. This has been a story. It continues to rage higher here. Let me just kind of get my daily chart up really quick. You can see this long-term area resistance right here around 48.70. We blew through that yesterday. Today we're continuing to push up. I did a little bit of a retracement, high to low. We're north of that 61.8%, again, suggesting a trend reversal, or I should say a trend resumption from this big trend we had up here. We're in a powerful bull kind of disposition right now in silver. Go to the intraday. Intraday, we have, a wonky volume profile. A lot of volume nodes here as well, and maybe not that much of a range, but we are north of that VWAP, that session VWAP. We're north of that point of control. This is going to be a really important level for me going forward here, whether or not buyers are in charge of this market or sellers. Right now, it's looking like buyers. We have that JAX1 level at 51 bucks even, and then that one-day max is up here at 51.35. On the downside, we do have call resistance down here at $50, which makes sense. That's a nice round even number for everybody to think about. Let's shoot over to the even the S&P. I know we talked about this a little bit already today, but I just wanted to pull up an intraday chart and look at the volume profile. It's a little messy here. We're below that VWAP, right? We're below session VWAP. Price is separating from that even more. We have a point of control that's fairly low right now. 68.43. But look at how many candles traded here all morning at this price point. 1, 2, 3, 4, 5, 6, 7. Yeah, I'm going to count them all. 8, 9, 10, 11 candles, 11 30-minute candles, boom, traded at that price. So that's price happiness right now, even with this little bit of a sell-off bumping into yesterday's IB high. We do have a pivot. We do have a one-day min down here at 24. Again, a little bit of downward pressure here, but point of control should matter today on a holiday. Back to you, Deli and Chai.
Thanks, Jimmy. Shai, preview our guest.
So we have Sam Madani he is the co-founder of Tanker Trackers, which is one of the world's foremost sources of covering illicit movements of oil. They use open source data and analysis to track the movement of oil tankers worldwide. So not only is he an expert on what's going on in the water, which we keep hearing about this glut, so I want to talk to him about that, but oil in general. So love to talk to him about what's happening in the oil markets.
Yeah, let's get my guy Sam in.
Hello.
There he is.
Hi.
You
a long
you
time.
handsome bastard.
My two most favorite people online. Anthony, I have more gray hair than you, for sure.
Yeah, look what happened to us, man. When we did our first podcast, you and I, there wasn't a gray hair on us. Now look at
I'm
us.
sorry, what are
I
you
know.
saying? What are you saying?
I know.
How you
Oh
been?
man, well, I've been great, man. It's great to see you.
Great to
Oil has
see you
not been
both.
the story this year. It's not been the story, at least in futures markets, right? There's always a
Right.
story in oil. It's never not the story, but
Always.
in markets,
Always.
yeah. And as far as pricing goes, here we are. Oil sitting at $60. You almost don't need to look at it day in, day out. It sits at 60.
Yeah.
Why do we feel so stuck here?
Yeah. I mean, from my perspective, I don't get a minute's rest here this year. It's been a lot of oil that's been shipping out from the corners that I'm tracking in particular, the darker corners, so to say. With Iran, Venezuela, Russia even. Russia has been hit by what the Ukrainians call drone sanctions. So whenever they knock out a refinery in Russia with drone strikes, what happens is that you get less crude oil that gets processed domestically and it gets shipped out instead. And so the ones who are really benefiting from that are the importers, being China and India in particular. So there's a lot of oil heading out, but as I understand, Rosneft and Lukoil have been placed under U.S. sanctions, and this means that in about 10 days' time, there won't be any more purchases placed by India. So I think that we'll see more oil shift towards China, and China loves sanctions. They totally benefit from sanctions. All this results in cheap oil for them to import. Now, if they're not consuming it, they will be stockpiling it instead. And so that's what they do. They buy the dip. They constantly buy the dip. And I think even as from a trader's perspective, you want to be doing pretty much what China is doing, and that is to buy the dip. And I think that once prices have settled, it's a good buying opportunity.
So let's talk about what you see coming in, let's call it short to medium term, here into the end of the year. What are some key things that you're focusing on that would maybe spark some more volatility in oil?
Well, I think the geopolitical risk wave has passed now. We had the Israel-Iran conflict over the summer, which lasted for 12 days, and that caused a bump in exports from the Middle East region, so at large, because there was this scare around the Strait of Hormuz, whether it will be closed or not. And I've never bought the narrative that it will be closed, because the United States is no longer the biggest importer from that region. And that was a threat during my childhood days when I lived in Kuwait when I was a kid, and we had the tanker wars visible from our shoreline, and that's no longer the situation. Instead, the biggest buyer is China, and nobody wants to upset China, so nobody's going to shut down the strait. The oil will just keep on exporting. So we saw a big jump in exports, and that was the first wave. And now we're currently in a new wave, because there was an August dip in exports by Iran. It went from like 1.6 or 7 million barrels down to 1.2 in August, and then now over the past September and October, it was north of 1.9 million barrels of oil. Now, just to remind you, before sanctions took effect, or before sanctions were announced in April of 2018 by Trump 1.0, crude oil exports were just north of 2 million barrels per day. And now, over the past 4 weeks, I have tracked between 2.15 and 2.3 million barrels of crude oil per day. So we're seeing something that we haven't seen since 2018. Now, the reason for this, we can always discuss. It all depends on which narrative you choose. I choose to look at the logistical aspect of this whole operation. I think it is just the fact that China wants to buy the dip, get a hold of as many barrels as possible, even if it causes enormous floating storages worldwide. It doesn't matter, because all of this will suppress the price of oil, and that is to China's greater benefit. So they are every single day. You load up a satellite image of the Iranian coastline, and I say, wow, how did that tanker just pop up there? This big VLCC super tanker. It's been offline for months sometimes, and they just appear there, identify it, and we add it into the roster of exports. And just every single day, one by one, they're heading out the door. Now, coincidentally, what happened was in late September, the United Nations dusted off the enforced snapback sanctions, and that is because of the nuclear enrichment situation. So what happened was they brought back sanctions as well. It's something that I've always thought would happen as a result of if they were trying to shut down the Strait of Hormuz. That would trigger the snapback sanctions. But instead, what happened was this whole nuclear situation. And so they digitally dusted off the old documents from 2015. They put it back on their website, and they rolled out the same old list of tankers that existed in 2015, some of which are no longer around. And I don't think the United Nations will do a job at all at enforcing sanctions on Iran's oil exports. I don't see much of enforcement from the U.S. side of things, other than additional designations. Maybe they're able to freeze and delay wire transfers and such. But the Chinese have built up their infrastructure for this. The Iranians have built up their infrastructure. Actually, if you want to do a lot of damage to Iran right now, you would lift the sanctions. Lifting the sanctions would reverse 40 years of this fortress that they have built up, because then they would have to get their entire tanker fleet back into the transparent market, and those vessels are too old to be allowed into most ports around the world. There's a 20-year cutoff for many ports, and so you'd have to get whole new tankers, or you'd have to engage in more ship-to-ship transfers off coastlines, which probably wouldn't be too appreciative, and it costs more. And the other thing is that if you were to lift sanctions, and I'm not saying it should happen, because there's still a lot of issues geopolitically to resolve. But if those sanctions were lifted, that means that that the money that is made from selling oil would have to go into the state coffer, because right now it's going left, right, and center, but the state coffer. Not much of it is going to the people of Iran. It's going to private enterprise. It's going to all the middlemen. They're all rolled up like ducks, and they're getting their share of it. So, and then there's the Islamic Revolutionary Guard Corps, who's also incentivized to export as much oil as possible to their allies and so on, whatever they have left now. Russia, as said, is exports just took off quite substantially. I think about 20% in the past quarter. Venezuela also saw a bump, quite a huge one, about 20% bump. For Venezuela, that's a lot. That's really demanding. And what happened was that was, I wouldn't say coincided, but that was as a result of, and I have my analyst hat on now, that is as a result of the U.S. Navy presence, the Southern Command Fleet in off the coast of Venezuela, which took effect as of September. And that caused the bump for sure, because those tankers, which normally would load up, we're photographing them from shore. We can see every single day how many meters deeper they're going into the water because of the oil that they're taking on board. And we could see that these tankers, instead of just dropping anchor after loading and getting maybe their hull scrubbed or whatever, it takes sometimes days and weeks, even months before they depart. No, these guys were out the door immediately. So they took off, and instead of the usual 650 to 800,000 barrels, we saw 1 million barrels a day head out the door. And now it's come down a little bit. There was a fire recently, which we saw from shore, that impacted the oil facility, but they're still able to ship out. They have two main terminals in the country. One is in the east, which handles most of the exports. That's where the fire was. And then there was one in the west. Now, I think all in all, exports are up for sure. We looked at all the 24 countries that we track maritime or seaborne exports out of. And I can tell you, like, from the start of the year to now, it's about almost like 3 million barrels per day extra. So it's amounting to large amounts. And if it's not being consumed, it's going to be stockpiled. And you want to be doing your stockpiling when the price of the barrel is low, not when it is high, obviously.
So when they talk about, we have all this excess oil on water, and the media has talked about this incessantly. This just means that it's going to a customer, or is it just out there floating, or is it just going to stockpiling? Like, it's not just, it's different than floating storage, correct?
It's like the most annoying basketball match to watch, because everyone's just passing the ball without ever taking the shot. And so it can take a long time. I see like a parcel of oil can come in from Iran. It can be handed over to one vessel and then to another vessel, and sometimes even back to the original vessel and then to another one. And this can go on for weeks. And then finally someone takes it up to China, but they do so under a completely different identity. It can be the identity of a dead tanker, a tanker which was like a nice one versus a naughty one. The vessel was scrapped maybe like a decade ago, and suddenly this identity starts pinging again on AIS for the first time in a decade. And so we're like, okay, that's a zombie tanker. So we look it up on satellite imagery, and we're able to identify the vessel, the true identity. And sometimes there's no honor even among crooks, because sometimes they'll take each other's identities, and they're unrelated, but they're both on the U.S. OFAC list, the naughty list of tankers. Which, by the way, if you combine all of the Western authorities which have applied sanctions, there's in combination with an NGO called United Against the Nuclear Iran, that number is 1,330 tankers as of today. So the dark fleet is officially 1,330. We track around 1,500 plus naughty tankers. And the overlap, unfortunately, between, if you just look at the governments that are involved, the US, UK, EU, New Zealand, Canada, Switzerland, and Australia, if you do the overlap of all of them, it's less than 2%. It's about 1.5%. So when you're talking about the West taking on Russia, they're not doing it in a coordinated manner. They call it the G7 price cap, but they're not sitting in a G7 committee where they're going to talk about which tankers to pursue. So enforcement, unfortunately, is not where it should be, simply because they're not cooperating. These authorities are not cooperating.
Sam, we got to end it there. It's been so great to see you, man. I tell you what, it's been a long time. We caught up quick. We need to continue to catch up. Everyone, go and follow what he's doing with Tanker Trackers on X. Make sure you stay tuned with what Sam is doing. He will give you insight into the oil markets like no one else in space. And what you created, Sam, I remember way back when this first started, is something truly incredible. And nothing but the best for you, my brother. Hope you and your beautiful family are doing well, and we'll see you soon.
My pleasure. My pleasure. All right. Take care. You too.
Thank you.
Cheers. Thank you.
So, again, you hear from Sam, we hear from you, we hear from all these different people in the energy space. No one's bearish, but price can't catch any sort of real bid.
Right. Everybody is looking to 2026, and it just makes sense. Even if you want to take the fundamentals out of the market, I mean, from a technical standpoint, this has been range bound and in a tight range and getting tighter for so long. We all know what happens. It either explodes to the upside or the downside. My thoughts are just because of the fundamentals, it's going to be to the upside. But that's generally what happens when you have a market coiling for months and months and months and months.
Yeah, Cooper, spot on. Chat. No, I mean, it gets, again, it gets to the point where it gets so pushed back to the end of the line where no one's watching the market,
Yep.
and then all of a sudden it comes into play. I own some of the stuff through the ETF, some oil stocks. I've been buying some. I don't own the futures yet. You and I have been talking about it. I hate being early in oil.
I know.
And I feel at this point where it's like,
It's
do I want to
tough.
start buying it a little bit? And it's just, I look at the risk reward. It's probably getting pretty close. I know I'll start be working bids in the high 50s if we were to get down there. But, again, if you were early in oil, at this point, time has already gotten me out. So it's like,
Right,
again, at what point
exactly.
does time start, to work against you as well? Because I always look at it for me, I either have time stops or I have price stops. If a trade's not working, it's not working. And I look at it and pretend I've been in oil, and I feel like I've been in the same position over and over again. I keep rolling it, and
It
I'd
would
be
have
right
been,
here.
yeah, it would have been
Yeah.
this whole year, basically.
Exactly. Yeah. So anyway, all right, Shai, a lot more to talk about. We'll see you in chat the rest of the day.
All right, thank you.
All right. T is in the house.
How's it
What's
going,
up,
Dylan?
T? Doing good, buddy. How are you?
Not too bad, not too bad. You back here.
Yeah, great to have you here for this segment each and every Tuesday. Tuesdays with T, my boy. So let's talk about some markets today, T. We put out the chat. Everyone wants to hear Bitcoin, but I don't think that we could just have an oil segment like we did and not talk about oil. So I'd like to see what you're seeing in oil, Bitcoin, and of course we'll get into the indexes. Everybody in chat in the meantime, hit that like button. We had Sam Adani this morning. We've got T Trades now. Hit like and subscribe. Never miss an episode of Ninja Trader Live, bringing you guys the best insight in the business. T, let's take a look at your charts, and I'll follow your lead, man. Let's see what we're going to be talking about today.
Yeah, we'll start out with Crudelli oil here. So last week we talked about it looking for a low to form here. So was looking for this week to trade lower, form a swing low, and we did that. And so I'm just looking for what I talked about last week here is for oil to trade higher into its current month open and that current month high, which is essentially the same level. And then if we can break through that, just previous month's high. If we do get a nice push here, I'm just going to be looking for oil to trade higher up into the 60s, mid 60s there. So that's kind of it for
Yep.
oil for me. It was kind of a choppy move in here if we go down to something like the hourly chart. But we are getting that breakout, so we'll see how today closes and if that can sustain. But I am looking for higher prices, as I mentioned last week on oil.
All right. Well, one thing I want to mention to everybody as well. This segment with T Trades is brought to you by CME Group, where we're using T's analysis to get you to look into other markets beyond just indexes. T, we appreciate your insight in all of these different markets. I want to stay with crude oil here just for a little bit longer. Talk to us. I know that you were talking a little bit more of the short term. I want you to widen it out a little bit, T, and show me what you see has been going on, because one of the things that we've been looking at in crude, and we've been talking about it on this network for a while, is that it's a market that's gotten into a massive consolidation this year. And I talk with Shai and how it's kind of gets put to the back of the bus per se, where no one's even looking at it, sitting back there, it's quiet, and all of a sudden it might be brewing something. What on a bigger picture time frame does it start to look to you as though this maybe becomes a trade in play, as maybe we'll call it?
Yeah, so just on a very high time frame, like a monthly, you can see we're just sitting in a multiple year consolidation, which isn't super ideal to be looking on this time frame. But that's why I was looking at the daily and monthly. I think the monthly is a good area to look in terms of short-term trading, but just doing something inside that consolidation. So that's why I've been focusing on these monthly candles here, where we have this hammer candle on the monthly, and that's why it's giving me that bullish bias, right? So as long as we're respecting this green box, which is just the upper 50% of this wick here, then we can see higher prices. And like I said, I'm more of a short-term trader, so I'm focused on, these week. So like last week, I'm just looking for this low to be ran out. Do we get a reaction? Now that we got a reaction, I'm just looking for this to trade higher. And if we, push through these highs here, then we can just sustain and maybe get a little bit of a breakout.
Got it. Where do you see resistance coming into play here with CL?
Yeah, so that's why I was mentioning for targets wise, just looking for this current month's high and then looking for this previous month's high, because these are going to be our short-term targets. Because if we're going to form a reversal and not trade to the upside, we're going to do it off of one of these highs. So we'll get something like that or something like that. Otherwise, if we can get a closure through this level, I just want to see this sustain throughout the month and have an expansion.
Got it.
So,
All
but
right,
with that, I think
what are
I'll
we
go
looking at
into
next here?
silver. Yeah,
Yeah,
silver. So silver
silver.
is what we talked about last week. It was probably the most interesting. And so if we go into what we talked about last week, we'll go to the hourly chart. But we were essentially looking for this low to hold over here and these lows to get ran out and to trade higher. So you can see we formed that low on Tuesday into Wednesday, and then we're sustaining this breakout here. And the silver was more interesting because I can actually frame something here long. Besides gold is just breaking out of this range, right? So it's less interesting. There's less of a point of interest for me to frame versus silver. I can see this range low getting taken out, and then you can frame to the upside off that. So I'm just looking for, on a higher time frame perspective, for silver to just trade back into these highs, depending on if it gets a closure through this monthly wick level. So just marking that out. If we get a daily closure through this level right here on 51 point, just around 51, then I'm just looking for that to trade higher because I'm viewing it as this is a swing point that's failing. So it's just going to run the high.
I
So
mean,
same
you
thing
look
on
at
gold.
silver. Yeah, when you look at silver,
Yep.
man, it goes back. Even that big move lower didn't have a red candle on the monthly. That's, I mean,
Yeah.
he had I think it was like a 10% break or something off that high. It might even have been more than that. And it still was a green close on the month.
Yeah. And with how I view structure, it made this protected swing, which is just when price runs out a low and then closes over this series of down close candles, which it did here. I'm just viewing this low should hold if we're going to trend higher. And that's what gave me the idea for that hourly structure. And if you go to the hourly, that's the exact same thing. If we go look, the series of down close candles here, we close over. I expect that to hold. And you can do the same thing here once we get the closure over here. That's when that trend has shifted from this bearish right here to bullish. And then now we're sustaining that. And you see, we can't really get any bearish structure. It was choppy, but this is just trending. So
Yep.
I know people wanted to talk about dollar as well. I'm pretty bearish on dollar. You can see it. I was going to talk about this, but it already ran out the lows. Essentially, if we go to the daily chart here, we formed a reversal off of this previous high over here. And then so I'm just expecting this to continue lower. We could form a low in here. That wasn't happening. It was just a consolidation. So I'm expecting this to continue here. And if we're at the start of the month, if we're forming a reversal, we could see this go quite a bit lower, which would lead to foreign currencies catching a low and trading a bit higher here. So,
Yeah, what's interesting about this dollar move, I'm glad you're bringing this up because we've been talking about that as a market to watch for what happens across the board. It's always the case, but this year, especially with the dollar, a lot of people have been talking about how the dollar weakness has caused, or people getting out of the dollar, getting into other currencies, getting into gold, getting into Bitcoin, and even getting into tech stocks. And so when you look at the dollar, when it actually is breaking down on the index, it has real repercussions. It's something that I recommend really all traders take to keep an eye on because when you've got the euro, you got the pound, you got the yen, you got the Swissy. I'm looking at all of them right now. Those are markets that if you see the dollar break out to the downside, technically those markets become a much cleaner trade. And I think T, you have experience trading these markets. I have experience
mhm.
trading these markets. A lot of traders out there don't, but those markets can trend and have a little bit less volatility and probably are better for a lot of traders that are looking for a market that might be struggling in like Nasdaq or S&P.
Mhm.
They're good trending markets, and when you have that good correlation, opposite correlation with the dollar happening, you see all those currencies catching a bid or an offer. It's a good trade.
Yeah, and you can actually catch the best move out of it because you can compare which is stronger or weaker. So for instance, if dollar is going lower, then you're going to want to look towards these foreign currencies futures and see which one is the strongest. And that's going to give your best trade or the trending trade. Another thing with the dollar is if you like to travel, it's a lot better to travel when the dollar is up here versus down here, just something to think about. So,
Yeah, no doubt.
but yeah,
I mean,
that's
Jimmy was
we
talking
can
about
talk
that all
about.
year with the euro.
Yeah. Yeah, no, see, I traveled in here. It was really nice. And then I also traveled here. It was less nice. But yeah, we can go talk about indices because I know a few people wanted to talk about that. So currently,
Sure.
there's weakness in NASDAQ and a bit of strength in the Dow. So if we pull up the Dow, I could see the Dow at least reaching into its current day high. I would like to see it trade into these previous highs over here on the left. So sustaining a bullish day. But if we look at NQ here, it's pretty weak. It's less interesting to frame to the upside currently, unless we get some sort of reversal around the open that we can trust. And so with that, I would just be looking for, the same thing that I look on every time frame where I'm just looking for a closure through the series of down close candles. If we can't get that and trade into the highs, it's less interesting. But I will probably be passing on indices today. It's not super interesting, but if I was going to be watching, I would just be looking at YM here, trading into the highs.
Yeah, I mean the divergence day on a bank holiday, not the most fun. I don't see a ton out there either.
Yeah, no.
Do me a favor, pull up the Russell. I'm curious to see what that looks like. I mean, that's been another market that's really been out of play for a while. I was trading it maybe a month or so ago. Just curious what it looks like today.
Yeah, it's not super ideal. Just very much just consolidation, a little bit of retracement. Within my strategy from a mechanical standpoint, I would be anticipating this low to hold and then to trade to these highs. So we'll see what happens, but that would be just mechanically speaking, because we ran out this low, we closed over this level right here. Then I'd be wanting to see price trade higher here. But like I said, I don't like to trade the weaker of the assets. That's why I would rather focus on YM as it's propped a lot higher. So
Yeah, no, I agree with that. I think that's it's an important point. If you use that same thought philosophy you talked about with the currencies, when you got dollar weakness, you want to trade the currency. If you're going to be a buyer, that's the strongest. Like right now, the euro is the strongest. The pound is flat.
yeah,
Yen, well, actually, the Swissie is the strongest against the dollar right now. Um, but again, that's
yeah.
the whole point of it, right? In principle, because you want to have the one that's going to have the extend the most and likely to reach the furthest target.
Yeah, and so just going off of what I said earlier is if the dollar is bearish, we want to focus on longing the strongest foreign currency. So like you were saying, the Swissy, it's breaking out to the upside. But if we look at something like the yen, like you're not really going to want to place trades on the yen as it's just consolidating here. You want to focus on where price is trending, which would be, in this market here, like you talked about. So you can see it's a lot easier to trade something like this that's just trending higher versus if we go to the yen, you know, it's a bit choppy in there. So.
I can't say enough about the correlation situation, and it goes the same thing for the indexes, right? Weak dollar, strong currencies trade the strongest one. And in a
Yeah.
market that's relatively flat, or if you're some people just are naturally want to be buyers of dips and equities. If you're going to trade the indexes, again, like you said today, I'm so glad you mentioned it. The Dow is the one you should be focusing on because if you're trying to buy the Nasdaq, which is the weakest one, it's down half of 1%, down
Yeah.
120 something points. I mean, you're going to be the one that continues to get stopped out. You don't want to be trading the weaker one on a day to the buy side to the day that you want to be long, or you're looking for reasons to be long. You want to be trading the
Yeah.
stronger one. With less than
Now,
a minute left, T, I want to see if you can pull up Bitcoin. We
yeah.
can go over spot, or we can go over micro Bitcoin, MBT. Up to you.
Yeah. Just pulled up the micro Bitcoin chart here. So, excuse me. So, I mean, we talked about this actually, I think last week of for Bitcoin running out this low. I think that's why it's up here. I obviously didn't watch it after I did the analysis on it, but now that we have this low here, I don't really like this reaction, right? We have a consolidation and then move higher, which usually to me means that we're going to get another continuation lower. Um, when I want to see a reversal, I want to see a nice aggressive move lower and then met with an aggressive move higher. So you see here, we have a nice reversal there. This is a consolidation. So I usually view these moves higher as quite fake. So if we can form a swing here and then trade that lower, that's actually pretty interesting there for Bitcoin going back below that 100K mark. And if we do fall below 100K, that psychological level, we could see some trending lower there.
I hate to say it because I own some Bitcoin. I feel the same way, man. I look at it, I bought the dip around like I started buying it on this last dip. I bought it at like 110 and I added at 106. And I'm looking at it going, man, if it doesn't hold this 100K and I watched the recent low being made, I'm like, man, I don't love that low. It's teetering, man. It really is teetering. We'll see. Last thing, I know we're out of time, but I'd like to see you
Hmm.
pull up Ethereum too. Pull up
Yeah, is that
ETH. Yeah,
MET?
yeah.
All right, yeah. So yeah, it failed. My indicator showed me it failed to run out this high. I don't really like it as much, honestly. It's just this reversal structure isn't as nice versus if you go to micro Bitcoin, right? You have a nice little V-shaped reversal sweeping out these highs here. So I would actually favor, if I'm looking short, I would favor Bitcoin for shorts over ETH. So
Yeah, I'm long ETH too, like
yeah,
34 to 3,500 ish. I mean, I need a
yeah,
T trades, tweet, pump it.
yeah.
Let's go,
I'm
baby.
not quite a Trump tweet, so we'll see.
Yeah. All right, man. Well, that does it for this week's segment with T Trades. Make sure you follow T on X. Goes without saying. He's one of the best in the biz and just laying out really clean analysis. And he opens your mind into other markets, which is why we love having him here each and every Tuesday for the CME segment. Hit like and subscribe on NinjaTrader Live so you never miss an episode. And also go check out T's YouTube channel. I mean, the dude does great work. I mean, I don't see really anyone more committed to education than my boy T. T, you're the best, man. I'll see you next week.
Yeah, have a good one. See you guys.
All right, everybody, it's Tuesday. And what do we know Tuesday to be? Well, it's black boxes, right? And what does that mean? That means it's Merritt Black and Christian Trading Boxes, where you get two guys that really, I say this all the time, but they really do set a masterclass for preparation and execution. Everyone talks about patience and discipline and but these guys, they do it in real time, and they do it because they truly believe in their preparation. And that's why they're disciplined, and that's why they're patient. So let's get ready to trade the open with Merritt Black and Christian Trading Boxes. What's up?
Morning, boys.
Hey guys. Hey, Deli.
Merritt's got the sweater on. Man, he's got the look of just, like he's just, it's in this look. Exactly where I was going. That was perfect. Christian's got the look. He's like, I'm in LA. It's still dark out. We'll get there.
It is. It's pitch black.
It's pitch black. What's the weather like by you, Chris?
It's still a little bit hot, which is surprising. It's already November. It's a little bit hot. It's getting windy, but no rain yet. Very dry.
Yeah. 42 degrees here in Naples this morning. I woke up. I was like, man, you don't
Yeah.
see that often down here.
What do
But
we
it'll
got?
be in
Is
the
it like one of
60s.
those polar vortexes? What's going on? It's cold here.
I know.
We had a fire last
mean,
night.
it's-
First indoor fire of the year. Special time. The kids love it. It's great.
Oh, what's better than that? I was up at the lake house last week, and me and my brothers were making fire, drinking a little bourbon, and up there in the mountains, and it was
sir.
great. I mean, there's nothing I love more than making a fire in the fall. It's just
It's
perfect.
primal. There's something about it, man. It's great.
I love it. So this morning, guys, interesting day. You have banks closed. You have, bond market desks closed, which really means majority of the desks are really kind of closed. But again, I said this earlier, and I think this is so important, and I know you guys are going to feel the same way. Don't let your guard down on a day like today. If you're going to come in and trade, to me, every day is a Super Bowl. You have to be mentally prepared every single day. You don't know what could come from a day like today. Just because it might be slower and the desks are closed, you could get some thin markets. Be prepared, work your stops, stay true to your preparation. I mean, again, if not, don't even bother coming in. If you're going to take it light-handed, come in and trade every day and protect. So let's start with you, Merritt, this week. What are we looking at coming into the open?
Not a whole lot exciting. I'm kind of on board, and you and I have touched on this. I feel like the past couple of weeks with this crude bullish idea. If you recall, a handful of weeks ago, we were talking about how those lows initially for a couple months around 60, 50 or so, they needed to be taken out. There needed to be kind of a liquidity grab, a stop run through there, and we got that into October. And we got the snapback at the tail end of October. And now it's a nice little bull flag on the daily candle, kind of pulling back in. So, as long as we're stabilizing around these 58s or whatnot, then to me, first place that crude wants to go, again, as long as, that's always an if then, anything can happen. But as long as we're holding that area, then 60-70 to, 61.70s to 62, that kind of 30-cent zone is a really good place where we kind of want to get to first, and that's a first inflection. Second chance entry on the long if we get above that area and hold. So that's a swing idea. That's a big picture idea, but it's something that I really like right now. Going to the S&P, obviously rip roaring rally off these lows. We got to a really good inflection for NADRO students and whatnot around that kind of 66.80s. It was a rotational quarterly VWAP play, right? You're coming off the upper extreme, you come back into it, you fail at the top. That was the bearish zone. You traverse the whole thing, you get down to the bottom. We don't know what's going to happen, but we found buyers. And so now we're right back up at the upper zone. So we are at resistance, no question, yet again in the S&P. So for me, this is kind of a line in the sand, similar to the crude scenario we just walked through, where if you get up higher, that's going to be kind of an inflection within a bullish environment. So this 68.60, right? If you want to get precise, 68.50 up to 68.67, okay? So that kind of 15 handle range right in here, which we've yet again rejected from so far in the afternoon session yesterday and the overnight. This is the spot. This is a critical inflection for the continuation of this bounce off the lows from 2 days ago, which, by the way, is puts all-time highs once again on the board, or this market is going to continue to struggle and at least be in this volatile, wide-ranging chop zone, right, between 68.50s and 6,700.
Yeah, it sure feels like that. I mean, we're aligned in the crude oil trade. I think the crude oil market's going to be busy for us next year, Mayor, maybe at the end of this year as well. It doesn't have that spark quite yet, but I do think it's brewing. But I think it's coming. I really do. And I'm glad you're keeping an eye on it. I'll continue to keep an eye on it. Equities, they are what they are right now. I mean, it is what it is. I mean, we go to you, Chris. Oh, by the way, Mayor, before I go to Chris, somebody in the chat said that you look like their dad in 1985. That was awesome. The sweater.
I love it. That's a compliment.
Yeah.
Thank you, whoever said that.
Yeah, it is. Yeah, it is great. He's got the cologne on too, the 1985 look. It's perfect.
I haven't worn cologne since I was in the 6th grade.
Oh, you got it. Come on, man.
I had a bottle of Curve.
So that's what that smell was at the Naples meetup.
There he is.
I
didn't
get
even
it.
recognize it. There it is. Oh man, Chris, we go to you. This is again. This is a market where I've seen you do really, really well in, right? Where we get back into primary trend. I'm not sure if we're back above the 9-day yet. I think we might be, but overall, market seems to get back in this kind of bull grinding mode. And I thought of you yesterday afternoon, as well as Stowe, like what was going on with that grind. I'm like, those are two guys that like this kind of market. What are you seeing this morning?
Yeah, it was a fantastic breakout. I'll share my plan here, but it was a fantastic, not breakout, sorry, reversal from that October 22nd low, both in ES and NQ last week. Significant level there, and we just saw a huge reversal back from that continuation yesterday. We are above the daily 9MA. We're still in an overall range, right? Like NQ is still range bound here. ES is still range bound, so you have to think, what's next? Well, we want to make sure that this bounce is protected, meaning we want to see eventually a higher low against it. And then when we get that sort of higher low, which maybe can come this week, maybe into the gap low from Sunday, we can bounce back up. And if we can create that higher low, we have a little bit more confirmation that we're going to at least continue as a sideways action or higher into Thanksgiving. I mean, I think we all know it's a very, very bullish week. And Friday's low, I personally think it's the low into that week. So I will be looking to buy pullbacks and seeking a higher low against that. I had a fantastic long on Friday that I rode all day. Yesterday was another good day, but now we're into pullback mode, right? We had a strong 2 days. Can we consolidate these gains? It is Veterans Day, so it makes me think that's going to be choppy, low volume kind of grind. We are into the first area of support. ES is back into 68.35, 40-ish. If we cannot hold here, also the 4-hour 9MA, then we can see a pullback a bit lower back, maybe into yesterday's morning low at 67.93. For NQ, we are back into some area of support here around 570s. If we fail here, can we come back down to 380s, 400? That's sort of the 4-hour time frame to say, okay, where can we get these multi-hour changes in direction? As far as the hourly, we have a better idea here of the support that we are in. We are into here's that 35-40s area, which has been a little bit of resistance. It was resistance yesterday initially. We sold off. We had a huge reversal from 93, and we're now back testing at. So we really need to hold here. If we are to continue higher, maybe seek a lower high, or I mean, I think it'll be a lower high due to the type of volume we can see today, and then consolidate. So scenario one would be a hold here, bounce up, maybe seek a lower high into 68.55, 60, or take out the prior day high and then reject. If we form acceptance up there, we can see higher. A failure here, if we don't get a failed breakdown here on a breakdown attempt, we can see 68.18 and then maybe at that point bounce. If not, 67.93 again, where we held that morning low yesterday, which is a pretty good area, and then set up a bounce for NQ. We are, it is weaker. I think everybody's been highlighting that today. We are back into the hourly 50 EMA, this 560, 570 area. But still, if we can hold here, we can still set up a bounce and then seek a lower high against prior day high. If not, this pullback that we're going through can be can take price a little bit lower and maybe take out the morning's low from that yesterday's reversal. And then maybe at that point, we seek a better higher low against the Friday low. Acceptance there at 400, then we go back down to the gap low. So it's, the price action currently is acting like it does want to make a new low. So I think I need to be patient at the open and see what it looks like for the first hour or so.
Yeah. Well, boys, glad to have the two of you here as usual on Tuesdays. Everybody in chat, hit like and subscribe. Never miss an episode of Chris and Merritt on Tuesdays. We appreciate you all for being here. Boys, lead the crew this morning. Going to be a day where everyone, again, I talked about it. Preparation is what leads to patience and discipline. We'll be watching. Appreciate you guys. I'll see you guys later.
Take care, Deli. Enjoy your week, not the weekend, week.
That's right.
What's up?
Morning, Chris.
You catch any of that gold last 2 days?
Yeah. I caught a few pieces. I caught some of the S&P. I kind of kicked myself yesterday. I got in the S&P off low of day, and I kind of only held it to probably like 68.25 or something.
From that,
but
the
that was just the plan.
6790s?
Do what?
From 6790s?
Yeah, probably the 80s. Yeah, but yeah, around that area. Yeah. It was a good looking setup. What about you?
I caught the initial morning long, which is like that. It broke out right away. And then I did not catch that big move after. I was kicking myself for it as well. But it was huge. I mean, it moved more than what I thought, for sure.
Have you dabbled in gold yet? I know you've been kind of talking about it, looking at it.
I have. I think I focused too much on it when it was choppy, and then the last 2 days when it went directional, I just completely forgot about it.
It's been in that kind of, I'm sure the way you view things with your moving averages and the pullbacks and stuff, like on the daily, right? It's been in that like really nice pullback kind of slot.
Yeah.
And then, there was, again, to me, like there was that kind of acceptance compression type of, consolidation thing you look for, and then boom, off to the races after the crack to the upside. No head fakes, nothing, just clean.
Yeah. Very clean.
But that's the thing, guys. Like for you guys playing at home, that's why you secure you have to be on the ball. You secure a really good trade location. If you don't, you're left with this terrible decision of what to do when it's now too far away from where the ideal type of spot was, right? It's much, much more difficult market to trade when you're away from those initial moments of what I think of as highest risk reward asymmetry. Doesn't mean you can't trade it, especially short term, but it's an important concept that not a ton of people talk about. Is like, where is that ideal risk reward? And the closer you are to the stop out point, the better it is, right?
Yeah. Especially for, I mean, to capture a move like that, you have to really think about like a swing,
Certainly the potential,
multi-day
yeah.
swing. All right, we're getting a bounce here off that support area that we're at.
Yeah, buyers coming in a little bit in the S&P.
What are you going to be looking at today?
Man, as I flip through the charts with a short-term focus in mind, I have this feeling that I sense inside of like trying to force something. I'm just not seeing much short term. We'll see what happens when the open comes and we get a little morning volatility. You guys know me. I can find a little scalp here and there, but I don't have anything to lean on right here in the indices. Again, gold is back on the bull, so we'll see if we can find some kind of trend continuation play or something with it. Maybe some kind of a slightly deeper pullback in gold to maybe the lower standard deviation around this area. That could be something we look for.
Yeah. Do you typically find that those other markets outside of indices are slow as well for a day like today?
Yeah, I think for the most part, right, you can have. I was actually talking with my desk manager about this the other day. How, look, for the most part, volatility is like systematic. It's across asset classes, right? It's just a thing, volatility goes through the roof. And most, that rising tide, if you will, lifts most boats. That's a different way of how that phrase is typically used. You can have isolated, like, for example, natural gas goes nuts, copper goes nuts, right? You can have those, but for the most part, when you have a real quiet, low volume, low vol day, it's pretty much across the board.
Makes sense.
I assume, outside of news catalyst in equities, kind of looking at your world a bit more, then that holds true for most stocks too, right? Like if it's a quiet, low volume day, unless there's a news release or something going on a company specific level, most stocks are quieter too, right?
Yeah, yeah.
Same kind of principle.
Pretty much.
Do you lean on any type of actual quantitative measures of like volatility, range, like do you lean on any of that to help guide you at all?
No, it's just trends. I think the biggest
Yeah.
thing is market/trend structure.
Yeah.
And like how you view probably like the pockets of the highest probabilities areas where there could be a change in the participant. That's why I see like this higher high, higher low structure along with the trend.
Mhm.
So I want to engage that in that area. But I mean, I see it through a different filter as you.
Different but related, as we've kind of
Yeah.
come to find out. It's always interesting. I think there's like certain, I don't know what they all are, but there's certain core good trading market principles, right? Because think about it. We're all trying to do one of two things, right? We're all trying to identify momentum or trend. To me, those are very, very short term versus a little bit more medium term things, right? Um, to me, momentum is more so a candle to candle thing when I talk about it, and trend is more of a swing to swing thing.
Yes.
But we're trying to identify those characteristics, and and within perhaps a support resistance structure or a mean reversion volatility band structure or whatever, and we're all trying to decide, do we go with the recent move in its direction as a continuation play, or do we fade that as a mean reversion reversal play? That's trading. You're not going to be doing much other than that, but there's 4,833 ways to pet the cat.
Yeah. You know, at the end of the day, everybody's trading the same trend. It's just how how
Your
how
frameworks and
you
filters that you apply.
yeah. Like I want the market to do the heavy lifting for me because I come from a swing trading background and I'm used to buying at the right time and I can hold for weeks. So I am bad at a counter trend mean reversion back to the mean. I mean, I sure I can take those trades, but it just doesn't make sense. Uh, but there's, you probably excel in that. I rather wait for the mean of the pullback into the mean and then look to engage.
One of my favorite things to remind people is, if you're saying that there is an uptrend of higher highs and higher lows, and your job is to buy this pullback right here, and you're saying, I never pick a bottom, I always go with the trend, I didn't try to catch the reversal from down here, that's stupid, this is all that is you can do. Well, guess what? That is just your limited viewpoint on a single time frame. If we were to change this time frame to where we zoom in, let's say this is a 1 hour chart. Well, let's look at a 3 minute chart. The 3 minute chart is going to zoom us into right here. And what is that chart going to look like, my friends? What is that chart going to look like? It's going to be a series of nothing but lower lows and lower highs, right? Theoretically, throughout this phase. And
Yeah.
you are by definition picking a bottom somewhere for that to turn.
Yeah.
Almost all trades, people just don't want to admit it, but almost all trades are a combination of mean reversion and trend continuation. Most
Yeah.
of them.
Yeah.
Just depends on what time frame you ask.
Yep.
Well, gold is pulled back to that area of interest, if you will. It's not like I have a great level there. It's just it's a spot for potential trend continuation. So I'm gonna watch it here.
Morning, Bren. Morning, chat, everybody. Guys and ladies.
Someone is asking what, when I use the term trade what is, which I'm sure Chris or somebody's going to say that they invented back in 1997, but I invented it. When I say trade what is, it's almost a psychology thing, but it brings you back to true market generated information, what you're actually seeing, where here it is, the acceptance picture is relative to a line in the sand. Is it above or below? Not do you think it's going to change for some reason, not do you want it to do something for some reason, but what is, with your key variables, what is the market giving you? And you can only trade that. You can sit on your hands if it's not what you want to trade. You can wait for the what is to line up with a good trade for you. but you only trade what is. That sounds like common sense. That sounds like a stupid kind of point to make. But believe me, guys, I see traders every single day who are trading something they want to be, or that they wish was, or that they're trying to make up for something that happened in the past, or that they think will be in the future. Trade what is. It's a big deal. Easier said than done. One practical piece of advice to help you trade what is to, here's a book on my little stack of books here.
Did you create books too? Wow.
Use a checklist. Use a checklist, right? If you struggle with consistency, if you struggle with this gray area of decision ambiguity and having a hard time pulling the trigger and having a lot of uncertainty and being fear driven, there's a bunch of things that can go on. Build a process, right? Real process. And then from that process, make you some nice checklists. Make you some nice checklists. Force yourself to literally physically check off some boxes before you can enter a trade. Force yourself to physically check off 3 boxes before you're able to flatten a position, right? It's very, very helpful. And I always say this, anytime you are dealing with risk, whether that's risk of human life, risk of financial ruin, right? Like actual risks, pilots, traders, checklists are a big deal. Checklists are something that's a standard, you know. And accountability.
Well, you know what those checklists are? Another word for that are parameters.
Yeah, it's forcing objectivity instead of just
What are the
doing
parameters
something by the seat of your
on
pants.
execution, on exiting, on sizing?
Exactly. It's a quick reference guide of your parameters that you have decided in your full process documentation of how you want to trade, the trader you want to be, your style, your niche. You like eggnog?
Uh, uh, maybe. You know, it's been so long since I've had it, like many, many, many years.
Clip that. See, the process structure and all these. Do you like eggnog? I like eggnog. I'm kind
Is
of a
that what you're
connoisseur.
drinking?
I would, look, I got it just got cold here in Nashville, and we lit a fire last night, and my wife brought home the first half gallon of eggnog. Life is, I feel like we need to get the tree out.
Yeah. Is that what you're drinking?
We're with the coffee for now. Oh my goodness. I wish y'all could have known Granny Black. She didn't make eggnog, but she made this thing called boiled custard. Woo! Chat, y'all ever had some homemade boiled custard?
Brother,
Oh, that was perfect. Oh, we're open.
Crickets.
All right, let's see
Here
what
we
we
go.
get here. We did attempt some sort of bounce probably like 25 minutes ago. Let's see if we can hold the attempt or if we reject a bit lower. We are again still into that support area. It is a little bit range bound at the moment for the last few hours.
AQ, I'll answer that in a bit. We'll focus up here on markets around the opening bell.
We're holding. NQ's a little flat. Yes. Yeah, ES has the lead right now. Cyclicals are a bit stronger than tech. And NQ is still inside its range. Maybe it goes up to take out its overnight, not overnight high, but this recent high around 6 a.m. But it's, you know, holiday for most.
It's that classic open from a profiling perspective, right in the middle of the thickest part of yesterday's distribution. Low opportunity.
We are into an ES, into the 4-hour 9MA. NQ's below it, but it is that first area from a trend perspective on the 4-hour. It is that first area of support, which is not seeing much follow through. But the initial pullback into it, we did see a failed breakdown here probably an hour ago. So you know, that is the first data sign that we held. Now we need to see if we can build structure a little bit above it, hold up here, and then move out higher. It might be a slow day.
I think we're guaranteed that.
Yeah. The times to be aggressive were probably the last 2 days, not here, as we consolidate these gains. Chris, when looking at higher highs, are you looking for a close at the higher high rather than wicks? No, nothing candle, you know, rules. It's more of a trend along the governing sort of moving average, which the market rotates around the 9MA. Some may say 10MA. It's all the same thing, but it's a trend sequence with higher highs, higher lows against in an uptrend, the rising 9MA, and in a downtrend in a downward 9MA. the typical consolidation inside that, higher high, higher low here is 4 to 6 candles on any time frame, daily, 5 minute. And then if you go into 8 to 12 candles, that's a little bit of a different structure, but it's 4 to 6 candles into that pullback. You put in the higher low and then you continue higher. So if you look at the 4 hour right now, we're into that 9 MA, and then we're on the 1, 2, 3, 4, 5. We're on the 5th candle. So pullback's alive, and so far holding structure here. Let's see if we can continue to hold and not make a new low. I think people want to buy pullbacks still in this market. I want to do that.
I am working a gold long. I took an initial entry, a quick scratch, and then a re-entry.
Nice.
Nice, 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 nice.
There we go. Seeing a little bit of action.
Oh, so I remember the question. Sorry about the delay on that. Was it AQ, I believe? So they were saying, hey, weakness of Nadro. Where is it? How do you deal with too many paper cuts? I feel Nadro's weakness is the many paper cuts and re-entries. That's certainly my style that I prefer. I love trying to squeeze bigger risk reward, and I accept a lower win percent doing so. And I think that there are certain skill sets and certain temperaments and certain things that are a requirement to do that really well. Nadro has no trade management you have to follow. Nadro is a collection of frameworks to identify risk reward, to potentially time entries, how you place stops, how you scale out of positions or don't scale out of positions, or manage winners, adding to trades, trading multi-market versus a single market. Nadro is not one thing in those regards. So there are plenty of people who apply Nadro and they trade with big wide stops and they don't take paper cuts. They set stops at areas where the idea itself is invalidated. So you're seeing more of how I personally apply Nadro, and some of the scalping stuff here when you watch what I do. It's not for everybody, but there is a place for most everybody within the Nadro frameworks themselves. You don't have to apply it like I do. And I always say, my goal in training traders and working with traders on the desk is to never, the goal is to never try to make some cookie cutter version of merit. That is not the goal, because that doesn't work. Cordelli talks about this frequently. You got to become, the guys at S&B talk about this. You have to become your best trader. So learning something super rigid and super buy here, sell here is just not going to work for most people when it's taught. But something like Nadro that teaches frameworks to identify risk reward, you pick and choose between being heavy in the order flow side or heavy on market profile side or heavy on the VWAP side. You get to structure kind of your trading business within those, and it's good information on really good tools. The biggest differentiator of who a trader is their trade management. Think about it. A swing trader and a scalper could have the exact same entry. What differentiates those two traders is how they manage the trade once it's on.
Hey, question on what you said, and it could be I mean, I'm curious to your answer. It may be a learning moment for me, but for everybody else, you spoke on having multiple attempts in an area, and then, if I remember correctly, your win rate or your being lower in that specific area or overall. That's my first point. Like, are you talking about that specific area? You're okay with having a lower
Yeah,
win rate
so
in order to go
if
ahead?
you apply, I'm about to scale out of a little bit of this. I'll take off a third. If you apply a tight stop as a tactic, as a style, you are right. We could go ask options traders this, right? Because they understand like those probability distributions of what percentiles of where price could be or whatever. The tighter you place your stop, the more frequently you're going to get stopped out. That's just how it works. Okay. There's nothing magic about a tighter stop. The tighter you place the stop, the more frequently you will get stopped out. So when we consider trading and trying to structure positive expectancy, right? What's the formula? Your expectancy equals your win percent times the average winner, right, in dollars or whatever unit you want to use, minus your win percent, aka your loss percent. But we'll do it like this: 1 minus win percent times your average loser. And if this is a minus, you use the absolute value of your average loser. If this is a plus, you got to make this a negative number right here. That's expectancy. That's the math that all traders are trying to put together through tactics and indicators and momentum and trend and trade management. You're trying to figure out what combination of how often you're right versus, and it's a trade-off, there's no free lunches, versus how big you win versus, hopefully, for most people, how small you lose. The interplay between those two things is how you ultimately find a process, repeat it, and then grind that edge over time and over trade after trade over the next 100 trades, 200 trades. So there's the backdrop that you didn't ask for, Chris, but that's what I just want to lay that foundation for everybody out there. So now when we talk about structuring our business with maybe tight stops or wide stops, if we're the trader that comes in and gets long right here with a stop right here versus the same trader, a different trader, but the same market environment who gets long there and places a stop right here. Okay. Trader A is going to have a lower, how often, right? A lower win percent. Trader B is going to have a bigger win percent at the cost of risk reward, right? If your stop is this wide, well, guess what? You got to make this much just to get the 1R, right? If my stop is this wide and both traders take profit at this same level, how many R did Daddy make? Right? Let's just call it 5. So I'm gonna go from, maybe let's call this person a 65% win percent trader at just call him a average 1R gain, to this trader. This business model is a 40% win percent with an average of 4R gains. Both traders are positive expectancy. If you take these numbers and plug them into this formula up here, both of those combinations are positive. Oh, I should scale out of more of this gold. guys, you don't have to geek out on the math. You really don't. I'm not a proponent of that. But you do got to understand what trading is, right? You got to understand the key variables of edge, and everything else for the most part is trade-offs and decisions, and what kind of style do you want to have, and what tools do you like to look at that work for your mind and your personality and all those kind of things, which ties back in with some prior conversations we've had there. So, Chris, I apologize for the long-windedness. I went into teaching mode there, but if you're going to take multiple attempts within an area, that comes with certain results, right? That comes with certain trade-offs versus wider stop. Does that answer the question? Or
Yeah, yeah. Yeah, you went into deeper into it. So thank you. I know everybody else is learning from it. My question, my other parts of this question was, are you then making a discretionary decision to decrease your size in order to allocate that full risk and spread it out across trades? Or are you putting on the same size and then going through those losses at normal,
yeah,
full R?
that's kind of it's almost a theoretical question, because if it how should I put it? That's made up stuff in our own minds, right? At the end of the day, whatever you end up doing, you are taking a risk per trade. If you want to structure it in your mind, like, okay, I only want to risk 1R per big trade idea, and then I'll divide that by 3, and that becomes what I risk over 3 max attempts per idea. You know what I mean? You're just structuring that. Like, that's one way to do it. Another way is to just say, here is, given my daily loss limit and how many general trades a day that I want to take, you could just go straight to, and I'm executing with tight stops. Here's how much I want to risk per trade, because I want to give myself at least this much size and at least this many attempts per day before I am out of risk for the day. So, you can finagle that however you want.
Yeah.
But it's an important consideration. Like, your question is a smart one, because a lot of beginner type traders, they say, oh yeah, I want to trade with tight stops. And then they don't give themselves a fighting chance for an idea. And they end up taking what I call paper cuts. And I've put out enough of my results online, and you guys can see what that looks like for my style. They're taking big, full 1R large losses, and then maybe they have a 3R daily loss limit on a super tight stop basis. They're shooting themselves in the foot before they give themselves a chance to be successful on the day. It's very important. All right, stopped out on the remainder of that gold, but great scale outs on 2/3.
Yeah, great trade. And guys, the indices aren't doing anything, so that's why I'm asking Mary questions. There's really, for me, there's nothing much to do here. It's not a high probability area, this chop, and I don't want to engage. So then part of my other question, I mean, if we get a deeper pullback, that's what I want, ideally. I would love a deeper pullback for a more constructive higher low against Friday low. But in here, it's just a little bit of divergence. Tech is weak. Cyclicals are a bit stronger. Who will win? I don't want to put my money to find out. Yeah, bank holiday. That's pretty. What would you? I mean, what is your perspective on this? I was thought only risking 1% of your account per trade. Do you think that's
In a
high?
lot of worlds, 1% per trade is a lot of freaking risk.
Yeah, that's a lot.
I know that's that is the most quoted common consensus of like risk per trade, but And it's fine I'm telling if you're a good trader with good edge, it's acceptable. It truly is. But just know that that's on the higher end of risk that you see across um, places where performance matters, places where track record matters. 1% is a lot of risk.
Okay, so before I got distracted by that, I forgot what I was going with this. What would you say is, or what would you do when the example that you gave, where you said, okay, this trader with the tighter stop, I mean, looking at your trading, I would say, you know, you do focus on tighter stops
Yeah.
to capture more, but are you ever in a position where, for example, you know, I am looking for a lower time from entry to capture a multi-day swing.
Yep. I love that.
I like the idea of leveraging like a 30-point risk in NQ to capture 500, 700.
Love it. I just went from 6 to midnight. Keep going.
That's a little bit of what happened on Friday. On Friday, I bought that low. I rode it all day. Fantastic day. Are you switching your mindset then to say, okay, I'm going to leave on this full trade because of the higher time frame context that you have an idea of? Or are you still managing risk based on that day's structure, right? I know you say you manage that versus like R multiples based on that day's structure.
The bigger
Like,
picture idea, 100%. What the
Okay.
for me, and you know, maybe I made some poor choices in my life with some of the terminology that I've used for things, but for me, a regular trade like with Nadro stuff where I'm lined up with a good narrative, and let's forget swing trades, right? Let's just say it's like just a good narrative and I'm day trading. That affects my trade management. It doesn't affect my entry tactics for the most part. It doesn't affect it, none of that really changes. My stops, you know, I'm trying to time up a trade really nicely, really precisely. And if that narrative picture is there, where I've got confluence across different time frames, I'm really bullish for some reason, you know, with my analysis. Absolutely, I'm doing the same thing as you. I've got a small, tight stop, and I've got a big picture idea that this thing can run. So it affects my trade management. If I don't have the narrative layer for a trade, such as the gold trade I was just in here today, I lamented it that it wasn't a great deal. It's just kind of a scalp, you know, that type thing. That's the word I use. If it's not a narrative driven play, I call it a scalp. I might hold it for an hour, but I have no intention of holding a core position for a big runner or anything like that. I'm just trying to capture some momentum. It's a scalp, right? I'm not scalping
Right.
for a tick, but it's just a non-core idea. So yeah, man, it's about whether the big idea is present or not, whether there's strength of narrative or not, and that dictates entirely trade management. In fact, I teach 3 different tiers of trade management. I use a leash, like a dog leash example. You have tight leash, where you essentially don't give it any room for error. If it's not behaving, you're taking profits. Medium leash, where you kind of give it a chance to start the trend and pull back on you a little bit and stuff. Or loose leash, with like a really strong narrative where it's worth it to let a trade come back on you. You keep that stop. You're not scaling out as heavy. You're giving the trade plenty of breathing room to do whatever because you want to capture that big idea. That's loose leash type of management. So I have kind of 3 tiers of trade management that I'll apply, and it's purely a relationship to the narrative strength.
Okay. Thank you for that.
Great questions, man. I apologize to the guy who's asked a bunch of times in the chat about if I use a footprint chart. The answer is no, but I think footprint charts are great. I think that seeing that granular view of buyers and sellers and aggressiveness and whether there's volume at the bid or the ask is great information. It's great data. For me, again, I'm not trying to tell everyone what to do, but for me, I used to use it for years and I took it off because I found that it just, the other tools and tactics and everything that I was doing and the skills that I've developed over 2 decades allowed me to trade good enough without the footprint information. And I would get a little frustrated sometimes when the footprint would, we'd be coming down into an area that I'm interested in getting long from. And it's got like an incomplete auction on the low. So I don't trade the momentum shift as a part of my plan that I want to get long from. And I missed some big trades. And so I got kind of tired of some of the false positives with the footprint chart. And I made a choice to kind of simplify. Looks like gold came in here and did just a little bit better job than where, my entry was here. It just made one more little complex pullback through the two, really clearing out stops through this area, which was what made me interested in this idea. And by the way, we could really dissect this and go deeper.
Yeah, that
A
gold
lot
looks
of
a little bit better now.
Traders that start to learn NADRO, they see this little nice rhythm move down. They see this little rejection from the developing value area low. They see the momentum shift, and they're taking stop outs there. If you'll notice, I didn't take that trade, guys. Why didn't I take that trade? Because of this. This is a awful looking low, just terrible. And so more times than not, we're going to need to run the stops through that low, make a better looking low. This was a better looking low. You saw me get long. It's the same trade, but it's better. This trade is essentially equally as good here, coming off of this little failure here. But I'm not in it. To me, part of the narrative contextual view was that gold kind of continued to hold this line in a sense. And I'm not drawing a trend line. I'm drawing like a dynamic development value reference from a higher time frame, which is, by the way, over. Well, you can't see it. I can bring it over. It kind of needs to continue to ride this upper standard deviation. So the fact that it's broken it down a good bit put me in more of a hands-off position. So that's why I'm not in the re-entry.
All right, NQ's right back up. ES is leading.
Yeah, a little life over there.
Really good higher low now established in ES. NQ still struggling a bit. But let's see if we can hold this. If we can hold an ES here, I'll move this ES chart. But we can form a little bit of acceptance here. Pull back, create a higher low, show that we are buyers are stepping up a little bit higher, creating a more higher low, and then continuation. If we get that structure, then I'll look to engage. If not, if it pulls back, then there's still a chance that we can continue in this range. And all we're doing is taking out prior highs and lows of the range. But it looks good. So we'll see if we get the structure here. If not, it'll just blast off without me, and that's okay. I'll just have to wait.
Piyush Sharma says a different tick size shows a different incomplete auction. That's the confusing part in footprint. Well, it does not. There are no actually different incomplete auctions. Because it's the same data no matter how you break it up into different periodicities. Some will just show them right at the moment of one bar ending to the next bar opening. because there's an auction in process, and we're artificially cutting off that continuous auction just because we decide of a certain bar size. So learning to recognize meaningful incomplete auctions is important versus just any incomplete auction, though, because of periodicities that you're choosing and cutting off bars during the middle of an auction. So it's very important that you learn to differentiate that. Phoenix, it's a little, that's where my mind went first as well, but it's a little bit different here because we're actually looking at, for a certain price row, what is the bid and ask numbers? What is the data? And it's a little bit different than just changing the bar type on a price chart. I would not be surprised in the S&P here, Chris, if this was just a stop run, right, through this like crappy looking triple top here. We'll see, who knows, but this is the first major stop run of the session.
Yeah.
The move lower was a minor stop run through these lows here. It didn't go get the overnight low.
I would say NQ had that.
Oh, did it?
Yeah. ES didn't.
Oh, nice. Interesting. I see that now. Huh. So NQ ran the lows and has yet to run the highs. But NQ had a better looking high with a nice little wick up here versus that kind of ugly S&P cluster.
Yeah, just range bound.
It's not a terrible place for short risk in the S&P.
We're attempting for a higher low on the 5 minute.
Hussein, I keep changing my mind. I've built out entire programs a couple times now, and then I've burned them to the ground and started a completely different thing. I am 99.9% sure about the structure of what I want to offer here. In fact, I'm like giddy about it. It is an evaluation to a live desk. What do you call it? Arrangement that is never been done before. It is entirely unique and different than anything else that has existed in that world. So I'm pretty excited about it. We're getting very, very close. I've settled on a path forward that I feel really, really good about. And when I say I feel really, really good about, it's different than I'm aligned with your interests. I'm putting as I have always offered these things in a trader friendly way where my risks and incentives and motivations are aligned with you guys for a proprietary trading desk. And that's not a small feature.
All right, so still in the range for NQ. All it did was take out that low, but if you can build structure here, I mean, it's just range bound. There's really nothing here to do an NQ. ES is so far failed that breakout attempt, just as Merritt talked about. And it's pushing back down to the range. So there's nothing from a directional trend following perspective. There's nothing there. So it's not worth me risking capital. Just wait until there's a, hopefully, I mean, I'm waiting for a bigger pullback. That's what I would love to buy.
Gold has a case of what's not happening here. The lows do not feel
Pullback in
secure.
gold.
Well, it was a decent spot for an initial bounce. You saw me try to get long. The buyers are hurting, and it looks like gold is going to go lower.
Yeah.
If today were a normal, more healthy trading day, I would probably have tried to get some short risk on and capture this impending breakdown.
All right, so now we have new lows for both ES and NQ, and it's the same structure. If we are to continue lower now, then we want to see some acceptance down here, some sort of lower low, lower high, to build structure here to tell you that sellers are moving lower from up here to down here. They're not going to let price bounce back up this time, and if so, that's a change in character, and then that's what you can sort of use to say, okay, there is some data here that's informing me that we can now move lower to lower support areas. And if you were aggressive this morning, then it's that aggressiveness was not rewarded. And hopefully not going through many stops out there. Yeah, it's just a tricky. It's just consolidating. We're consolidating the last 2 days. It was a pretty big move, right? So you can imagine that with a holiday type day, now it's time for, like anything, after you exert a lot of energy, to rest, contract. Hey, if we have a LA meetup, would you make it?
Yeah, schedule permitting, absolutely. I've never been to LA.
Never at all?
Yeah. I'm from the woods, man.
Some really good cobbler over here. That'll bring you out. Yes, digestion. We're digesting, the last 2 day gains. If you're a trend follower, you're not doing much. You weren't expecting that takeaway. There's no way you knew what I was going to say. Yeah, I'll show you around, show you what tacos are. Real tacos. Hey, talk dirty to me.
DX, I don't think so. I mean, there's what people think these days in trading is not what it was 10 years ago. It's definitely evolving. But the initial balance, correct, was the first two market profile TPO periods, which is the first 30 minutes of the pit session for a market. That is what the initial balance was initially created as. Some people very quickly began to use only the first period, so the first half hour. Anything inside of a traditional 30-minute TPO period, you no longer call an initial balance. You call it some form of opening range. Nashville's not trying to be LA. I mean, depends on Nashville as a whole is not trying to be LA. LA's got its own thing, and Nashville has a different flavor. There's a lot of people from California here that are making Nashville more like California. That's for sure. It's crazy. I used to live in a more now I live in a different part of town. I used to live in, let's call it, a hip part of town, and I mean I had like 3 or 4 people on my street, Chris, that were from California, like new to Nashville from California. It's uh it's a real thing.
Yeah, a lot of people left, I don't know, a couple years ago when they all migrated to Austin and then your area,
Yep.
Memphis, Florida.
Hey, more for you and me, right?
Yeah. I mean, it's still crowded over here.
Oh, sure.
Like anytime you go on the highway, 8 o'clock on a Saturday, you're in traffic. It's pretty crazy.
The person with the username Cal says they never mention they're from LA. Kidding. Yeah, I'm in Franklin as well. Cal G. Proper bagel, absolutely, Coop.
All right, so not really much happening. We're not getting this micro acceptance or this low high down here at or under the low. So there's still no structure here to say, okay, I want to focus on a directional breakout or breakdown, or just mean reversion back. And this range is too small for me to engage in. There's really nothing to do here on the equity side. Would love a breakdown. Pull back more. Let's see if we can build structure down here now, and maybe that sets up a breakdown. Yeah. Erase a run sounds good. You know what sounds good? Pickleball.
What? Pickleball?
Yeah.
It's fun.
I used to play a lot of racquetball.
I used to play a lot of squash.
Great sports.
Yeah.
Starting to look wedgy, Cooper. Where do you see the wedge? I see more of like a megaphone if you were to sort of look at it like this. An ES at least. Yeah, I would say megaphone. You have that here. So we can hold this lower area, then we can bounce back up to the other side of it. NQ, I do not see a wedge here. That there's really not good structure.
It's funny. Some people say wedging. Some people say megaphoning, and I would say horizontal balance area, just straight sideways with a few stop runs, right?
Yeah.
I tend to focus on where more of like where what a profile would look like and where the fat distribution would be versus extremes of bars and wicks and drawing diagonal lines. So the certainly different ways. Saw Radioactive says, why do we even need a narrative? Well, if you're scalping short term enough, you don't. But context matters, guys. Being able to, and you know what Chris did, and I was getting so excited about earlier, or what he said, was about how he uses a lower time frame to dial in an entry and risk for a bigger time frame idea. If there's a holy grail in trading, that's kind of it. Why is that? That's because you are amplifying risk reward. You are using a lower time frame to set your risk, and you're using a higher time frame to frame your reward, aka it's much bigger because it's a higher time frame. Being aware of a higher time frame context, I don't care if it's basic support resistance, I don't care if it's a weekly volume profile or composite market profile stuff or whatever, but doing or big picture moving averages, doing something, guys, for context is very helpful to your trading. That's why we need narrative. Narrative is just the word I use for the story unfolding contextually.
Yes. How would you answer this question? I'll share mine after you. Marrying my bias is where I take big losses. Any thoughts?
Oh, I love this. I love this question. Getting married to your bias is something that creates big losses, and often, no offense, I'm talking to myself here, often what we would call dumb repeating losses, right? Those days where market's in a downtrend and you look back at the end of the day and you're like, holy crap, I tried to buy it 8 times in nothing but a downtrend. How stupid is that, right? Well, it doesn't feel so stupid in the moment, does it? Right? It's only with the benefit of hindsight you can look back and say, that was stupid. I hate myself for the way I did things today as a trader. Blah, 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 blah. So you have no bias unless you have a line in the sand where that bias changes. Problem solved. I'll repeat it. You don't have a bias. You have a problem. If your bias does not have a line in the sand as to where it's invalidated, then you can have a bias, and then you can try to trade it in a healthy way without taking repetitive, stupid, big losses, whatever, right? If it's truly big losses, then that's a risk management problem. If you're trading bigger size or taking bigger risk per trade than you should, more times than not, it's people who fail to respect that the market has told them your idea was wrong, buddy, right? So let's not sit here and bang our head against the wall. That's the deal. Learning to see. And this is why Chris and I use the term acceptance. When the acceptance picture changes, let's say I have a good line in the sand and I want to buy from above that area. If there's an acceptance picture, aka the market holds, let's call it substantially enough below that line in the sand, the idea is over. I can either now look for shorts if that's part of the plan, hypo 2, if you will. This is why people have 3 hypos. It's because you want to have a bias, have a view on risk reward, but then you have to be flexible and nimble when it changes, when it tells you that it's wrong. It's a big deal. It's a huge skill to learn. What's your take on that, Chris?
I mean, you said pretty much everything. I think it's really easy to get caught up in that where you're stuck with your bias. But I mean, just to add on to what he said, everything pretty much he nailed it. If you can have a better understanding of, like for me, the answer for that would be, well, you don't have enough knowledge of market structure, trend structure, however you want to frame it, market profile, whatever helps you understand structure. You don't have enough knowledge of that. And there's nothing wrong
Right.
with that, but that's what's missing. You need to learn that so you
A
can
good
start.
a good bias is not I'm bullish because of something I read on X or someone I heard on CNBC. Then you're screwed because you have no place, again, going back to what I said, of where it's wrong. There is no I'm wrong point. So you're just going to take
Yeah,
excessive losses on some bias. That's why bias gets a bad name.
yeah. Just find something, learn something where you can apply that structure that's repeatable, because the market moves the same across every time frame. Just find something on larger time frame that's repeatable. For me, it's trend structure, right? This higher high, higher low, or lower low, lower high area. If I align with that, most of the trades that I take will be in alignment with that higher time frame trend structure. And being the reason I create a morning plan is so I can be in the present and focus on what's happening in that market that day, and try do my best to execute that, or else you will get stuck trading something that it's not going to really work out for you. That's a great thing about this. It's you just have to learn it. Just takes time, focus, bring your risk down while you're learning. Right? Trade those, do demo the prop accounts in order for you to be able to live long enough in this learning phase to then reach profitability.
Yep. That goes back to that question earlier around like risking 1%, or I think the guy followed up and was like, well, should I risk 0.5%? Well, starting out until you've shown something in terms of consistency of results, number one, you should be on sim, right? You should be risking 0%. And
Yeah.
then once you get a good plan and a good methodology in place, you want to start not at 1%, not at 0.5%. You want to start with the smallest possible position your method will allow for. That could be 1 micro or 2 micros, essentially. If you have to have the ability to scale out, you have to be able to trade 2 micros. What's your normal or average or larger range of the stop distance that's allowable for your trading? Okay, it's 2 micros and it's XYZ number of points. That's your max risk per trade, right? And that's your starting point. And then how many attempts per day do you need? Multiply that times your max risk per trade. That's your daily loss limit. Now you've got a risk plan in place that you built not from, I don't care if you've got a $10,000 trading account that you could have or $1 million trading account that you could have. When you're starting, you trade as small as possible, not some percent risk of what you can risk.
And then you can bend the rules a bit and see where your strategy thrives the most. Like for me, it's one directional markets. So I then risk more in that window, because I know that that is an environment that my strategy thrives in, and I want to be able to extract the most.
You want to differentiate a good trader from a bad one? Ask them what are the conditions in which their method underperforms.
Yep.
How to gauge if you've reached a certain level of consistency? Time, percentage growth. Time matters, and more specifically, rather than time, sample size matters. Okay, so you got to collect a lot of data points of trades. I don't care if that's over 2 months or 2 years, right? If you're a slow swing trader, it needs probably going to be 2 years. If you're a short-term trader, it could be 2 months. It's the sample size that matters, not the time. So under an adequate sample size, I would suggest looking at risk-adjusted performance metrics, because that's the name of the game. Let me draw it out for you, that we don't have to use any math, any numbers. We'll just do it visually. If this is your zero starting balance and your equity curve looks like this, right? Let's just make it even more dramatic. Well, this is not great. It's not great because your maximum drawdown is that big, and the amount of money that you've made in the account is this big. Okay. Can I move these squares? No. The yellow square is bigger, or rectangle is bigger than the green one. The heat you've taken, the drawdown that you've experienced is bigger than the gains that you've put up. Your gains are really kind of worthless. Your gains are not really that good. It's almost like the footprint conversation about periodicity. We just happen to cut it off right here at this period where you're up a bit. Where you are right now doesn't matter as much as what the risk-adjusted view of the overall return stream looks like. That is what you want to look at to determine, am I putting up consistency? Over the past handful of months for a short-term trader, have you had some gains? Obviously, you got to be putting up gains, or else we know you're just losing and there's no consistency, right? It's a different kind of consistency. Have my gains been a decent risk-adjusted basis? If you want to know the nitty-gritty of it, we use a term on our desk, ROMAD. And it's simply, the math for ROMAD is green box divided by yellow box, right? The return divided by the max drawdown. And if you get that over 2, and you start to put up like a couple of months where your ROMAD is better than 2, I don't care if it's tiny amounts of money with micros or huge amounts of money. It doesn't matter. The dollar amounts don't matter. This is a scalable business. You can do it small, you can do it big, up to capacity, right? Anyways, I think that answers the question, but it's very important. That's how I would look at, are you doing well as a trader? It has to be risk adjusted, or else it's futile. If the execution skills are low, I see some of that in the chat, right? I suck at execution, blah, blah, blah. Number one, you got to strip it down. Don't try to be advanced with execution, right? Get it simple. Simplify the execution process, the rules, the checklist. Number two, you got to trade with wider stops. If you suck at execution, you are just going to suck more with tight stops. So, path dependency. How do you get to, you've got good ideas, but you're not able to capture them. You're not able to participate in them because your execution sucks. I don't care if you blame it on psychology. I don't care if you blame it on a lack of tactics. Pretty much everybody blames it on psychology. There's more likely a skill gap there with the actual execution and your ability to do it well. You don't have rules in place to prevent you from being impulsive, these kind of things. If you suck at execution, widen out your stops. Make the path dependency of a trade being successful or a failure more based on the idea than the timing of the idea. That's how you overcome that. And then do market replay, do drills, study under a mentor, learn how to get better at execution. Watch our stream, right? That is how you could then incorporate more execution path dependency and the benefits of it, such as risk reward amplification. That's the ticket, guys.
One thing that I would add to that is in all the journey to get better in your execution and really in every step of trading is it's really, really, I know everybody wants to make money and I know everybody wants to reach a payout, but it's so important to focus on executing and what you and the opportunity that you get from learning your execution, your emotional state, your mental state, like everything that comes from that. I have fear of losing it. I'm gonna take partials. Like there's a huge disconnect there because you're not that you're robbing yourself of the opportunity to learn from that moment in your execution, what happens in price, what like I've been able to dial it down and say there's three types of breakouts for me. A breakout and it breaks right away, a breakout, a little bit of consolidation, chop, and then continues, a breakout, a deep higher low back test, and then reversal back up. Like those are I wouldn't have been able to learn that if I was too attached to I'm so close to my payout. It's just one more trade, $80, and I will get my payout, and then you lose it all. Right? You don't. There's such a big disconnect there that many traders go through, and you really need to remove that. Like I can't emphasize enough. You need to trade demo. You need to trade sim. You should have no emotional attachment to the money that you're trading, so you can learn what you need to learn. But it's not always the case. And that's such a big
Spitting
pain point
truth
for
bombs.
traders. What's that? I didn't hear what you said.
We could do a whole podcast on some of these topics we've had today, including what Chris just went through there, guys. In fact, that might be like a blog post idea for me. Is like what's a good title for that? Missed missed opportunity, or not? No, because that signifies more like a trading thing. Missed reps, right? Like something like that, like where you're actually delaying your own growth. That payout that you care so much about, you're actually delaying getting more of
Yeah.
those by focusing on it. Which is kind of a principle of life, isn't it? Like what you squeeze the most, like you kill. If you love it, let it go, right? All these kind of like lifeisms, phrases. So yeah, gold all the way at weekly VWAP. Recall me getting uncomfortable with how it was,
Wow, look at that.
yeah, failing in that case of like what's not happening and a little bit of a shift there. So I came off from re-entering any longs. It's just not surprising to see. Okay, well, we've reverted to VWAP for the week.
All right, so back to the indices. We finally made a decision here. NQ's leading the move lower. We didn't really have that acceptance that I wanted to see. So there's really, my rules of engagement did not set up here. This is just a continuation of the breakdown. And now it's moving into a lower area. ES is attempting to follow. We have to see if it'll have follow through or if it sets up another reversal. But if you traded that and you went through stops, you can imagine that you don't have the emotional or mental capital to now execute when there is a trend. So let's see if we have any support into 490, the next area in NQ, and then yesterday's morning low, which was at 450-ish. I am interested in that area for a long. See if we come down there. 450 to 400. And ES is really not moving. But if it breaks down, we have 68.18, which is an area that I'm interested in as well. So I'm just going to wait and see what we get. Can I take a look at gold? Merit's been covering it. It's dropping. Let's see.
Got the chart up right now.
Yeah. From a trend perspective, let's share this. So here is the daily and the daily on the right, the hourly on the left. On the daily, we had a 50 EMA wedge, which those of you who know my wedging setup, we had a 50 EMA wedge breakout. And we're attempting higher, but after this big drop, you can imagine that we're most likely seeking a lower high, and we are into this sort of resistance area. And now if you come down to the hourly and say, okay, the hourly 9 EMA uptrend has ended, we're now pulling back into the 50 EMA. Yesterday's morning's consolidation. So there's a chance that we can find some support here as we backtest yesterday's open. That's, 44,090 for 4,100 area. We can get a good reaction there. So that would be a nice spot to see if maybe a possible bullish reversal setup sets up for those of you. All right, ES is really not breaking lower with the NQ. Merit, Chris, thoughts on scale that at break-even point. Example, 40 tick stop loss, first target 50% of size at 40 ticks, and the rest 50% at main target price. This is a little bit with my own exiting approach, so I'll touch on this. I feel like in order for you to assign that sort of partial exit strategy, you need to understand the type of move that your strategy can generate, like, the MFE or the MAE. If you can have a better understanding of that, for example, I know in my own trading that my average stop in NQ is 25 to 35 points. For ES is between 5 to 7.5 points. I also know the average points that it moves in my direction out of this specific setup. So if you don't have an understanding of that, then I think you would be cutting yourself short and saying, I am fixed on my half of my trade out at 1R and then the other half at target price, because you may be leaving a lot on the table. So I would work on finding out what does your average move look like in the trades that you capture. Like for me, it's a 1.5R where I want to take first partials. But maybe Merritt can say something else.
I think I'll do you one better. I know from working with a lot of traders for a lot of years that most moves to break even, both in the moment and even a designed process, that calls for a move to break even, is an emotional crutch. Unfortunately, that's what it is. It is.
It is.
An emotional crutch for most people. Who rise above that a little bit are people who are or have trying to apply a good, what they've heard, blanket trading statement, right? Never let a winner turn into a loser. Well, heck, let's put the stop at break even. Great. We accomplished that mission. Well, that is too simple of a view. What matters is how much oscillation is that market having around that area historically, based on your style and the way that you're timing up those entries. And would a move to break even early in the trade or late in the trade or at any point in the trade make sense based on essentially the statistical view of how that market's moving around your areas of interest? I know, for example, in in more of a mean reversion type of entry, that there's statistically a lot more back and forth, a lot more wiggling that a market is going to do because it's rotational by design. It's more sideways by design. There's more back and forth by design. So moving a stop quickly into break even or trailing it into positive territory is quite frankly not the smartest thing to do. In a really clean momentum driven market where you're going with a continuation and you got a really tight stop and you're looking for it to go, then by all means, a really tight stop and therefore essentially being at a move to break even or trailing past break even makes a ton of sense. The right trade management and trail or no trail of a stop depends on what you're trying to do and your style. Bullcrap blanket trading statements that everybody should do this, nobody should do this. It's garbage and it's ignorance. You got to take a look at your strategy and what's best for it. However, don't make emotional decisions in your trading. Don't move to break even because you're scared. Don't move to break even because it lets you feel just like, oh, now I'm risk-free in the trade. That you could be shooting yourself in the foot getting risk-free in the trade. It could be a bad thing. Those are my thoughts.
Yeah, what he said.
I feel like the guy who like sets up a card table, on like a like at a campus somewhere or something and says this, prove me wrong, or something. I don't know.
Yeah.
That's kind of my MO when I get a little hot and heavy on a soapbox topic. That's exactly why you go to break even, to be risk-free in the trade. Well, did you hear what I just said?
Like at break even, your trade wouldn't be invalidated.
It could be though, Chris. It could be, right? You want me to draw it out? We're all visual. Like if you're taking clean momentum style breakouts, like bars are looking like this, the market's really moving cleanly, and for example, you're taking a breakout through this level. By the time this market is here, you very well, like, I don't care if your stop started down here or whatever, it probably didn't, because that's just, you don't give this type of a trade that much room. But your stop can really get tight into this area because you're demanding that it goes or the trade is invalidated and there's likely more rotational behavior within this potential breakout range. So it makes sense, right?
But I mean, at that point, you moved your stop up. It was not break even because your entry was at the low, no? Or are you saying that?
No. The entry's right here at the breakout point of this upper end of this range.
Oh, I feel like that'll fail 8 out of 10 times that new high.
I agree. I don't trade that way. It's an extremely low win percent, but it's huge risk reward. So, can you get away with it? I suppose some people can. I think there's reasonable limits to any form of moving to break even. But for example, let's just go back to this breakout moment, right? And I know equities traders who look for large size on the bids. For example, they see like a big bid fill in right here at this breakout point. They will put their stop one tick below that bid. I don't think that applies to liquid futures. You just can't do that. That's not a thing. But in lower float equity names, you can look at a large participant and you can kind of protect yourself on the other side of them. You can identify icebergs and things like that and put tighter stops beyond those things. You can do that in futures. But anyways, this style of trading, you really can not only move the stop to break even, but you can really trail it really tightly if you wanted to only capture momentum. And when the momentum changes, you stop it out and you capture that chunk. It's a style choice. It's a decision. And moves to break even and beyond very quickly are appropriate for that style. Most of us don't trade that way. And so for most of us, those type of quick trailing stops and moves to break even are usually emotional decisions, and they're usually mistakes. Don't forget, it ties in with the execution skill sets that we talked about earlier. If you kind of don't have those skill sets, you want to start somewhere simpler and start somewhere looser and start somewhere where you can breathe a little bit. I don't know what you mean, full gluten, that big size stops only work on equities, not futures. Big size. Putting orders behind a big size in the order book. Yeah, I tend to agree for the most part. All right, Harshul, I've seen this question a couple times. Can you talk about scalping trade locations? I don't know, man. When I think of the word trade location, I think of contextual trading, not so much scalping, but I think trade location, when you're trading shorter and shorter term, matters less. It more so matters the situation of the order flow, stop runs. I use this DVA framework, these blue bands that you're looking at, volatility bands relative to VWAP for the session. That's my short-term trade location, right? So when you saw me getting long gold, it was from the lower extreme of that deviation from VWAP, and I caught that move up into VWAP. Phoenix says, I'm not getting long until ES repairs that poor low. Here's the poor low graphically on market profile.
What level was that?
Someone in the chat was saying, I'm not getting long ES until it repairs this poor low. You have B and C period, the second and third 30-minute period of the sessions that have kind of formed the lows at the same price, give or take. And that is not
68.30.
Yeah, that's not typically a good indication of 68.31 of a low that has a higher probability of staying the low for a while. And a lot of times there's a need for excess to be created beyond those. Guys, you asked the question in chat. I didn't cherry pick any examples here. Let's take a look at this on market profile. You have a weak low right here on this day. What does the market do the next day? Takes it out, cleans it up. You have a poor high on this day, which we left and traded lower from, but what happens 2 days later? Gotcha. Guiding. So all this person was saying here for today is we currently have a poor low. Therefore, they're not as interested in longs until that looks better. Someone asked earlier in the chat about volume profile versus market profile. Well, there's one of my favorite features of market profile. You don't get that as cleanly and as simply and concisely out of volume profile. I'm not in a camp that one is better than the other. They're different tools.
Steve, still waiting for this 400 to 450 area in NQ. It looks like we're coming down to it. Hopefully we can make it down there. I do like yesterday's morning low as a reversal idea. See if we can get there. SPY still a bit sideways here. If it can break down, we can see 68.18 now, but still a bit range bound.
Oh man, we should have been more focused on crude.
Never traded crude.
Why is this not? Oh, it's a different link color somehow. Let's fix the linkage. There we go. Oh no! Okay, that's supposed to be my ES dedicated. Sorry, I'm talking too much out loud. That's what's going on. I was on the wrong tab. Okay, check this out. Crude. Let's change to an appropriate crude volume. Let's do 300. Maybe even less. Let's do 300. No, let's do 200. It was too much. It was too much. That's better. Crude with a nice intraday trend, as you can see here.
I like trends. How'd you guys do today in the chat? Chris, NQ 450 is the top of the gap. What gap? Where is it at? What gap? NQ has a gap. I see a gap much lower than 450. Don't you think getting there would open up the full fill down to 225,173? Wow, that's a 300-point move from 450.
I
175.
like totals.
No, if we lose the 410, 450 area, we would be coming down into 260s, which is the Sunday's gap low. We need to see how that's respected first before we even consider your 175 level. 173. William, you choose the one that makes money. The gap from Sunday at 2,227. Yeah, that's not 173 though. You said gap at 170 or no, 250. Where's the gap at? Let's see. 450 is the top of the gap. That's what he says. I don't see a gap there. I continue to wait for this 400, 450 area. That's what I'm interested in. Yes is teasing everybody. Tries to go lower, it bounces, tries to go lower, it bounces. I mean, it does feel at this point it's going to break down.
Yeah. That again, anything can happen. We never know anything for certain, but that is not a good low.
We are at some support here in NQ as we backtest the 490 area. But hopefully we can see 450s. But either way, this is the pullback to seek a daily higher low against Friday's low. So we can see more continuation lower into the gap low. I'm really looking at that gap low around what is that? 269. I really like that level. But I'm thinking more like multi-day swing.
So between the two of us today, we only took the one trade that I took, right?
Yeah, there was nothing here for me.
Take notes on that, guys. When it's a unfortunately for Chris and I, you've seen a lot of choppy days on for random distribution of our Tuesday streams, and this being one of them, at least in indices. But just to recap the gold play here, before we ever got there, we talked about how not a ton of interest, but if gold does pull back to this lower area, it could be of interest. And then we don't take the first trade, right? That first momentum shift, potential entry. Look at all the buying that came in right there, because there's stop run vulnerability. We wait for the stop run. We get a nice, make $1,000. Wham, bam. Thank you, ma'am. Trade doesn't work out on the final third of the position. Over here, we start talking about something is not happening in gold, how it could break down. And if I recall, what I said was, if today was a better volume day, a better trading day, then I probably would have tried to short this breakdown. And then to put a bow on it, if you try to short this breakdown, where are most people trying to short this breakdown? There's a little ledge, this guy right here, right? If you short that right around in here, and once this thing drops all the way down to this low, so if you shorted someone, let's say in the middle of this bar, your break-even stop is never gonna last if you move that to break even real quick, because it should just go, right? A lot of times it doesn't. A lot of times it needs to come back, retest an area like this did. So a couple little points to leave you guys with as we wrap up our time here today.
Hey guys, how's it going?
Yo.
What's going on? Exciting day, no news. Banks are closed.
We got some movement.
Yeah, a little bit.
Well, maybe not in indices, but gold and crude are moving.
Mhm.
I don't know if you follow those.
Yeah, I recently started trading gold.
Nice.
Kind of messed my key setup there off of a pretty important level here for us, but yeah, I'm ready to bang out a trade if one appears.
Cool.
You're focused on gold or still looking at NQ?
I've got both running today, so we'll scan both markets and see what happens. NQ is a really interesting spot here in a higher time frame. We start digging in this low volume node here, then we might be able to find maybe some potential buyers. This one kind of anomaly so far this week is we haven't tapped a week open. That's something that I track pretty heavy, and it's got a pretty high percentage a hit rate on Tuesday, Monday, Tuesday, and we haven't touched it Monday. So just kind of, keeping that in the back of my mind. But we'll see what happens.
Very good.
I would like that level. That's a good level. That and the gap low on Sunday.
Right here. Oh, the gap low, or you mean like Friday's the actual gap fill?
No, the gap low from Sunday,
Okay,
269.
267. What's 2 points between friends?
Yeah. So we'll see. We'll see what we get. All right, my friends, I have to get out of here.
Chris, enjoyed it as always, my brother.
All right,
Chat,
fellas.
great questions today. Man, that was we made the most of a slower session together. It was good.
Yeah. Good teaching lesson stream for everybody. All right, Leo, good luck. Maybe
Leo.
it bounces here back up for you.
Adios.
All right, take care, guys. Bye.
Leo and I are at the same page. Hey, man, it's good to have people on the same page with you. You got somebody to count on. Everyone should just pop in, a couple of likes for Merritt and Chris. Those are some great fellows and good traders. I, on the other hand, I'm just mediocre. But you know who's missing? Solo Leo. That's what you're getting. Stowe decided to take some time off. So I'm filling in. So you're going to get lots of me, Nick, and XY later in the week. We just had a really interesting order. I think you could probably see it right here. 1,000 lots, give or take between a couple of ticks there, filled on the offer. That's going to be a short for me. I don't even have a bracket in here. Just as a teaser, this is kind of that's the wrong stop. Hang on, let me cancel this. Anytime I see trend activity, so we have a trend down, and we get a very large offer, just come in and boom, here's 1,000 lots, have fun with it. I'll jump in that as a scalp. And I'm not going to do anything else right now because I don't have a stop. So I just need to, I wasn't properly set up here before we got started. So I might just take this for a quick, 8 or 10 points and then kind of reset. That's my fault. All right, so we'll just take it for the 12 points there. Let me put my ATM back on. Okay. Darn, if I had my risk settings right, I would have been happy to add to that and then, hold for a little more. But, that's the thing is like when you're trading and you make a mistake, platform mistake, risk mistake, you want to get that corrected right away, in that case, I didn't have a stop in. I'm not super familiar with, just adding a stop ad hoc in NinjaTrader. So I'm just gonna cover that trade. Thankfully, just it kind of went. I could scale out. Just take it very quick, 12 points and reset. But yeah, this is a very kind of you saw me kind of just jump right into a trade because something happened immediately right here, 54 at 540. Right, so we have this downtrend here. 5-minute OR trade played out nicely. All the way down to this level that we'll probably talk about we'll be talking about more on NinjaTrader because we've got it coming to NinjaTrader. From an OFL perspective. but we've got a downtrend, kind of hit that target. But the perspective of the day is still trending downwards, and we have that large offer that just came in and said, "Here's 1,000 lots, NQ. Have fun with that." Um, I will absolutely take that short trade. 1,000 times out of 1,000, especially when it just kind of sat there after that order filled. So that was the kind of the reason before just jumping into a trade before kind of getting set here. So what's going on, chat? What is that indicator that showed 1,000 lots? This is just the delta profile. So imagine this being the volume profile. It's going to show you all the volume. So the ask and the bid volume. The delta profile is just going to subtract the ask volume minus the bid volume, and that calculation is the delta at that level. So this is just showing you that 1,000 lots were filled on the offer between this tick range. And I use a tick compression for this delta profile. So this is 12 ticks. So every bar that you see right here is representative of, let's see, math, 3 points. So that's why you're seeing the larger numbers. The reason we compress them in NQ is because if you did it for every tick, you would just be so zoomed in, and you would miss out on a lot of context. So yeah, I mean, that was kind of the reason for that trade. And that's what the delta profile is. Anyways, haven't watched the NQ time and sales until recently. How often do lots fill like this? It just depends. There was a period before and during all the Trump tariff talks, the first time around, that there was it's what seemed like an individual trader that was putting 1,000, 2,000 lots on, on a pretty regular basis. Could be, whatever, but there was definitely 1,000 to 2,000 lot, transactions being done on a regular basis with like frequency in March and April. And after that March V-shape, rally on the higher time frame, that guy kind of disappeared, or I hate to say guy, but those types of transactions are not as frequent as they were. Is that Delta Map? Yes. This is like a modified version of Delta Map. So essentially, the only thing that's being colored here on these candles are the most extreme levels of buying and selling. So this exhaustion marker here is literally just in response to that large 1,000 lot order filled there. Days since last explaining the delta profile 0. I know, but that's the great thing, is that I think it's such a powerful tool that if somebody's consistently asking about it, maybe they're newer to trading or new to looking at order flow. So, and I think it's a good thing to, I think generally it's a good idea to understand some of the different techniques that people might use to trade. And order flow is not there's no, there's no golden indicator or golden method or approach that's going to give you a 100% win rate. But using order flow for me helps me understand, what's going on underneath the hoods. And that is incredibly helpful for not only entry, but confidence as well. And what's your opinion on footprint charts? Well, I used to use footprint charts on a regular basis. I started out with the full footprint chart from, that had every single transaction, the volume, et cetera. And then I found somebody smart that could code. That's where kind of Orderflow Labs started. Is we found somebody that was smart enough to code some stuff from the footprint. And so eventually what happened is I took everything that I was looking for from the footprint, and applied it to either a volume profile type of mechanic like this, the delta profile. Some people have seen a lot of my posts on Twitter, the delta footprint. I still use that today, just not as intense because of the leg to leg feature in this delta profile here, but also the buying and selling, um, that we're showing here on Delta Map is also like having a footprint without having to, zoom into the numbers, so to speak. Because I want to look for trends in buying and selling pressure and not every single footprint bar. I think the trap that a lot of people might get hooked into with footprint charts is you can look at anybody who's ever looked at a footprint chart knows this to be absolutely true. You can look at any footprint chart in the past, right? 10 minutes ago, 5 minutes ago, any time frame that's in the past. It could be like, oh, look, that was a completed auction. There was a bunch of zeros there. And then boom, like you sell that level. But when you're looking at it real time, you know that those footprint candles are being created and you only know what they looked like at the end, right? And so it's kind of like this false sense of security that, oh, buy side, buy and balance on the footprint or completed auctions on the footprint actually mean something in real time when they don't, because we even take chart time frames and we make things up, right? Like I'm using a 700 volume bar. The market doesn't care about my 700 volume bar. It's just doing, it's transacting buyers and sellers. I'm using that to give myself context. So somebody like on a footprint chart, they may be using a 5 minute footprint chart. Well, that's just a slice in time, right? So, a 5 minute footprint chart with a completed auction and all that good stuff. Well, you don't know that until it's done. And so for me, it was one, I've got everything that I want from the footprint chart, in code showing in, either in the candle or the profiles, or the other part of it was, zooming too far into under the hood, and the footprint, did that kind of had that negative effect for me. And so no longer do I need it because I have what I want, and it's taking me away from looking at every little single thing that could be happening on a footprint chart. Sorry for the ramble. When do we get the GCOR caveat? Great question. How soon do you want it, driver trades? I think I can get it done this weekend. It's been a bit crazy here in the Leo household. So, but I'll share. And just for context, those that know or have followed me for any time know that this OR mid is a trade that I'll take in NQ. So basically, you look for a breakdown of the opening range or a breakout. This doesn't really qualify because it's literally just kind of a poked candle that there's no volume that built here. So this would be, classified as like a qualified setup for this trade. So once we break down from this OR, I'll short this OR mid with a stop above the OR high. And target the OR low and then target 100% extension and beyond of the opening range. I provided a lot of stats over the past 4 years on this trade for NQ. It's it has a positive expectancy as far as taking that trade over time. It's about a 35% win rate trade, so that's something that everyone needs to be aware of. But definitely has a positive P&L curve expectancy. On gold, I ran the same I say I. The truth is, I have somebody that is really good at Python, and um, now that we're friends, he does cool, like he'll run data for me, and he doesn't really want to, he's just kind of he doesn't want to be known, but he's a legend. So I had him run the same parameters for the opening range, mid trade, and gold. And what was really interesting is that the short on the OR mid trade performs a lot better than the long. I say a lot better. It's not like breathtakingly better, but it's definitely there's a skew on that OR mid short trade. Um, and it was enough to draw my attention to it. So that's probably kind of what I'll talk about are those differences comparatively to NQ, right? Where that trade is kind of equally, the P&L curve is kind of equally distributed up and to the right for both the long and the short. Now, always, anytime somebody says like historical, anything, whatever, you always want to remember that, you know, future performance is never, or historical performance, sorry, is never indicative of future results. So you always want to be aware that, things could change. And that's why when I write up these posts, I share information so that to inspire you to do your own research, right? I mean, hey, here's an idea. It's backed by data. Here's the data. Um, don't, don't just take my data and run with it, but do your own. Um, and maybe that will even inspire you to do your own type of work on different data points or different trade setups, right? Gives you a more confident way to execute when you know something has a long-term win rate over time.
Pásele,
Is he a
güerito,
trader who can also
¿cuántos
code?
le
He
ponemos?
enjoys trading as a he enjoys Where are we at? No, let's see. Yeah, I mean, the week open is far. And the thing is that we have this huge low volume node. So like we could actually dig into it a little bit, like a decent amount, and still rally out of here and nobody would know the wiser. But for 100 points, I'll call that I'll book that one. 90, 90 points. I'm not gonna give myself too much credit for over credit that trade. I appreciate it. Thank you. You made your own leg to leg and delta volume using strategy output for the DOM using static DOM for live accounts. It's not too bad. Nice. I can't believe they let Stowe take a break. I can't either. Stowe is Stowe's a super super good dude, and I came in. Everyone's looking for Stowe, and they're getting Leo. So I'm sorry. Hey, thank you. Appreciate that. You guys are hilarious. Barely made a new low there. Yep. I certainly did. And you know what? That's kind of one of the reasons, like continuing to hold that trade after that low's made for me is just, that's kind of the target, right? Like make a new low, cover the trade. And also, if you're looking for a long, that's not a terrible place to get long, is you take out a prior level and you see a bunch of buyers come in. Like we did right here, these 290, 54, et cetera. You see all that buying pressure coming in, and that's not a bad long. So it's kind of like when you can see the other part of the trade, the other side of the trade, um, that's a good thing to keep in mind as you're trading. So like you're short, you're holding a runner. You see lots of good buying at a level or kind of a setup that you would take normally, like on the other side of it. If you were flat, that's usually a great cover. Do you know what else a great cover is? The best, this is the best indicator for any trade. If you take a screenshot of your trade and you send it to your buddies, that's when you should flatten that trade. We call it the screenshot curse. Kane knows. Kane knows what's up. That's literally the moment you're taking screenshots and you're telling all your friends. That's the time to get out, or at least take profit. The screenshot trade does the screenshot curse doesn't fail. It's if there's one thing that has 100% win rate, you caught the low. Nice. What is the name of the indicator? The screenshot indicator? Oh, okay. Yeah, I see what you're saying, Kane. Yeah, I caught the low. 3 minutes later, there's a new low. Good morning, Kane. I didn't even know you were in here. That's what makes Twitter a special place. Amen. Amen to that. You just tuned in. Kane, we took this short from 89 up here and covered, I think, the first one around 15, and it just kind of ran for us. I think we got about 90 points out of it. I appreciate it. Pretty good trade there. And then we were also talking about some of the improvements that we're making to our stuff for NT. We got the news news stuff going on and some major performance updates coming. What's happening with those 1,000 lot contracts that were affected both upwards and downwards? Are they still there? What can be expected with the data? So we did take a short right here when those contracts got filled. And the context was we're in a downtrend. a big offer just came and got filled right there at 38. And we just kind of took a little scalp short off of it. I actually had my risk settings, my ATM settings weren't right. So I just covered it for a scalp and that was done. And that's it for me. Once that trade's over and I reset, I'm kind of no longer thinking about it. Um, the thing is that large trades do affect the market. Sometimes they don't. And so you don't always want to assume that you know something that you don't. And so the way I think about it is instead of, oh, that's a large offer, there's a huge seller in the market, you don't know their intention. And so the way I think about it is how's the market reacting to that liquidity, right? 1,000 lots comes in, offers the market at 540. There's a little bit of a downward move after that, but look what happened right after. The 20-point drop, it rallied 100, 90 points. So I don't really care. Now I don't really pull that information forward. Now, if somebody offers another 1,000 lots at 540 again, then I might take a look and see how the market reacts to that. But for me, that trade sequence is over. What's your bar data? This is a 700 volume bar. Oh yeah, we did do a podcast with Kane that was just pushed out on Sunday. So if you want to listen to that episode, it's Painting the Tape. You can find it on Spotify and Apple Podcast, which is all now sponsored by Ninja Trader Live. So that interview is live. Kane tells a lot about his story, how he started trading, kind of story through prop, crypto, all that fun stuff. I trade my own account. Why did I think you were Kane? That's the allegation is nobody's ever seen us in the same room together, but they've seen us on the same stream together. So I don't know. Is AI or are they using AI to make the same? We're both handsome. I don't have a YouTube channel. It was a great episode. Yeah. Kane's a great dude. I always love talking to him. So let's talk about where could we start to look for a new trade setup? Right here in the middle of this volume cluster, there's really no great place for me to engage. You could make an argument for, you know, kind of a long around this little range, just based on, the price action alone, because they've been, I hate when people say the word they, but then I do it too. We've been just kind of using this area as support, although it's been breached a few times. It's not the worst long in the world. I'm just not too thrilled about taking it. Le vamos a poner? We do have a downtrend, so that kind of contradicts, getting long. So I guess in short, I would see what happens if this low gets taken out and maybe look for another reversion type trade back up into the bulk of this volume. Or maybe a short right around the 550s area, like at the top of this little range. That could be another type of short-term trade that I would take. There's really nothing great. Like we're in a downtrend, clearly, but it's also not super aggressive. Our, relative volume is only 90. There's a bank holiday, So there's, it's just a little bit lighter of a volume day than we've had. So I'm just not going to be, happy to just jump in willy-nilly. Not that I am on any other day, but, just kind of want to take my time, let things develop. And I think there's something really important about that. If you're not seeing a great setup, there's nothing to do. Did I trade gold today? No, but I missed this beautiful trade. There's two right here. This green level, you're going to be seeing that quite a bit. For me, we've just gotten it over to Ninja. This here would have been a long trade for me. And then once this broke with this volume, trading against it, then looking for continuation would have been this. So this 41.32, just kind of a key level for me. Once that really broke with volume, and I'll test it 2 times. That's a great level for me, looking for continuation off of it. So I missed that trade completely. I wasn't at the desk, but that's kind of, I'm not trying to hindsight what I would have done, but when I put up the chart, I was like, dang, I missed that opportunity to take those trades. High time frame, we're still building. We have kind of this little double distribution start to build on the high time frame. This is a 4-week rolling profile. You know, there's a nice low volume node here. Makes sense for buyers to kind of use this area to defend, further exploration lower into this larger volume node where there's been tons of volume built up there. It's like from around this time. So yeah, it's kind of it's a bit of a mixed bag here for me. This was kind of an A+ trade. Just seeing order flow really come in at that reference point. Seeing this trade here, just that order flow hitting, those 1,000 lots at 38, etc. What episode is the Kane interview? I see episode 18. I don't think the site's been updated yet, but if you go to Spotify, I don't know what the name of the episode. It's special guest Trader Kane. That's the name of the episode. That is the episode name. Really, that's not a conversation for me to cover whether I think it's better to train your own account or a prop. Do you trade when you're not streaming on Ninja? I think the answer to that is I trade on multiple platforms. Most of you know. And if I'm on Ninja Trader prior to coming on stream, I'll trade on Ninja Trader. Other times I'm trading on a different platform. And then some other times I'll just trade on Ninja Trader. Like if we have a really good day or if we get off stream and I'm really interested in the trade, I'll just keep trading in that. But I trade on multiple platforms. I don't think there's anything wrong with that. You found it on Apple? Nice. Season 2, episode 4. Is there any chance Order Flow Labs will offer a one-time lifetime? No. Unfortunately, there's so much that we do on a regular basis to make things better that we've consistently done. For the past 5 years, that it just wouldn't be feasible for us. The title is Milks Kane Milks Prop, I think. That's funny. What is the volume profile on the far right on your chart? I like how it's offset. This is the standard volume profile that starts at the RTH session start. So that's the, for some people might call it the New York open. I just refer to the regular trading hours open. And then this profile here is a delta profile. So it's just literally the ask volume minus the bid volume of the total volume, of total volume. And it's calculated on a leg to leg basis. And that resets every 60 points based on the setting that I use. The delta profile to the right, is there a similar indicator on a different platform? There is not. TradingView does not have order flow level data that's accurate. They have what they call order flow, but it's also, I think it's like $1,000 a month, and the data is actually inaccurate. Mr. Josh Platinum, yeah, the TradingView can't do delta anything. I think TradingView is an excellent charting platform. Personally, I haven't used it a ton, but I know it's, number one as far as charting and being able to kind of like easily write your own scripts, which I've done a few times. I've actually shared a few, even though I don't use it, day to day. But yeah, from a trading, as a institutional, or say as a professional or like a retail level trading platform for order flow, it's not the best. I actually wrote a blog on cumulative volume delta. You could read about it. I'm pretty sure it's up there. Let me double check. My thoughts are, let's see, it's not up there. I'll post about it. It's there. It's just not a simple 2-minute conversation, but I'll post about it and link it on my Twitter. Are you talking about Delta Profile on the playbook? Are you talking about the Delta? Yes, the playbook definitely covers that. You can get order we have two versions. You can get the free version of the Order Flow Labs tools is available on the site. It's been available we've offered a free version for like 3 years. It has lots of useful type things. So like weekly MGI, for example, is in there, single prints, VWAP, etc. The $1,000 thing for TradingView is literally tick charts, not data. Yeah. Yeah, I mean, if they did add that and improve the refresh times, I think it could be viable. Stefano, I'm not totally sure on the answer on that. If you want to send me a DM on Twitter, I can find out. My NinjaTrader developer would be able to answer that. No better platform for saving charts and drawings. Yeah, charting platform A plus. Professional level, retail, like retail level, professional level execution platform for order flow, not the best. And I think everybody knows that. That's not a secret. Nobody, there's no reason to say that um, you know, a high class luxury sedan shouldn't be put on on a racetrack with NASCAR cars. All right, chat. We have about 10 minutes left here before the end, and I'll be back with one of my favorites on the show is Farm. So we're gonna come back in a couple hours, trade the close. So before we shut it down here, what do you guys have for questions? Anything that you want to cover? Anything that I covered that was confusing? You extracted the only trade of the session. I mean, I would say the only high probability trade since I jumped on. There were two. This one, it didn't really run, but we got a profit out of it, and this one, which went, pretty nicely. Can you explain on the delta profile when you see the blue? Are you looking at them as buyers, sellers, or buyers? Same with the red. Um, it's it's all contextual, and I hate, that's the truth. The truth is that it's contextual because, like, if we can isolate here, this range, what are we seeing? We're seeing lots of positive delta and sideways price movement. So what that means is there's absorption. So there's both buyers and there's both sellers. But right now you would say buyers are really not able to progress price forward. So if you get a bunch of buyers in a tight range that aren't really able to progress price forward, usually, well, most likely, next case scenario is that they would start to, sell their positions and get out, and that these sellers here that are kind of sitting on the offer reloading will continue to reload unless price squeezes through here. So I use this as an everyday trade setup or strategy. Exactly what we're seeing would be a short for me, but context is important too. And for me, I don't really want to look for this type of absorption trade when there's so much volume right at the top of this, little node here. So for me, this is a hands-off trade, but the truth is that there's lots of buyers in here and there's also lots of passive sellers in here. And so it's the context of understanding what's happening. It's not just red as sellers, blue as buyers. You have to be able to understand the context of how that is shaping up.
That's a great explanation.
Hey, thanks, Jim.
Yeah. Very awesome, man. Great job, man. Solo today. Man, you're carrying all the water this morning.
I know I'm looking forward to trading with Farm tomorrow.
Is it
I
tomorrow
mean,
or
today. Yeah.
Yeah, that's gonna that
That's going to be lit. I mean, we're going to see Farm trade live on NT. I think all the other streams have been just like, hey, here's his thoughts and analysis. Let's bang out some farm trades.
Yeah, it's much anticipated, Leo. I mean, this isn't just something that just came up. This is like, you have a list of things that you're dying to have happen, and this is the top of the list.
Yeah, I'm excited.
Yeah, for sure, for sure. Thank you, Asian.org. Appreciate your your comment there. Anyway, let's hit that. Let's get those that thumbs up button cranking for Leo. Subscription button is right next to it. It is absolutely free to click on the subscription button. You just, you boom, left mouse, boom, click. We greatly appreciate that. Thank you everybody for being part of Ninja Trader Live this morning. We had a great session. Before I let you go though, I'm going to first of all thank Leo again, and then we're going to do a quick edge report. So Leo, thank you for being here with us, and hopefully you'll rest up, have a good lunch, get ready for this afternoon.
Yeah, I'll see you guys back here in a little bit. Thanks, chat. See you, Jim.
All right, all right. Let's go to the edge report. One of the things I wanted to show you, I don't know if you're using the desktop platform, this is the desktop platform that I have on my screen. I have a chart up here. I have a 30-minute NQ chart, and I have this little bar. It's called the Market Info bar, and it's an add-on. You guys can get it for free. I could give you a link. I'll put it in the chat, but it gives you, statistic. Maybe you're not looking at a market analyzer. Maybe you just have one screen, but it gives you some good statistics. The regular stuff, right? Open, high, low, close, volume. And then it gives you ranges. It gives you daily range, ATR, percent of the ATR. We're at 70% right now. How many days to roll? It's a really handy little widget here. And the other thing that's kind of cool about it is I could click on the upper left of it, and it gives me this box, this thing that pops out at you, and it gives you the statistics of this contract. We're looking at the E-mini NASDAQ right now, or the classic, traded at the CME group, contract value. It has that there. It has a minimum tick size, minimum tick value, and the notional value of this contract, right? This isn't something we always think about, but the notional value of the contract, this is a $510,000 contract, a big contract. At the micros would only be a tenth of this, but it tells you the month, it tells you the rollover date. And then it gives you the ATR again. So it's pretty handy, especially if you're looking at a market and you've never traded it before, you wanted to see the tick sizes and stuff like that and the notional value, just click on that. I'm going to click back up there to get rid of that. So bear with me here. I do have, Sav got me what I guess they're called a little tiny URL. That'll get you to the page to read about it. And then if you scroll all the way to the bottom, you could download it if you're using the desktop platform. But I didn't want to mention it. It's handy because it's on my screen all the time. In any event, I have a 2-day peak here at the NASI right now. And these white lines that I have here, these white parallel lines, this is just the initial balance from yesterday. And I have the line extended over so we can kind of see it into today. That's only the first two candles, right? This is a 30-minute candle. These are only the first two candles. The bottom of the initial balance is down here, and I'm dragging it over. And then I can compare it to what's going on today. Well, today, our initial balance is within yesterday's initial balance. In other words, the paradigm of the marketplace hasn't shifted that much. Now, one might say, well, it's kind of shifted to the downside. And yeah, we're trading below it right now, right? We're trading low. We have a breakout on the downside of the initial balance right now, and we're just kind of trading around that JAX2 level, the 25,500 level. The other thing I like to compare, though, is where are the points of control and where are the competing points of control. So the point of control yesterday, 25.46. The point of control today for the value profile is 521. So you can see we've moved down. We've moved down. Now these profiles aren't great. They're not Gaussian bell-shaped distributions. They're kind of wonky. As a matter of fact, today we have a competing point of control at the top of the value area. That's at 615, 25,615. So again, maybe it's not mature, or maybe it's just the nature of today being a holiday, and this is where we're at. But I like to look at these two side by side for me to think about, has price really changed to a different level, right? Has that electron jumped a valence group up to the next level or not? Right now, I'm saying no. This is all range bound, and you can measure the range from where we're at to where we're going. So just a little tip there on how to take a peek at that. So right now, though, the NASDAQ isn't looking good. The story of the day, though, which wasn't a story this morning, as a matter of fact, we said it wasn't going to be a story this morning. And boy, were we wrong. This is the 30-year U.S. Treasury bonds. We were talking, this is old news. We were talking about, well, it's a nothing burger today, right? The bond desks are closed. There's no real data, but there was some data. There was that ADP weekly number, and look at that big green candle. We just drove out of that a trend channel that we've identified, really since the end of October, and the moving averages are starting to arc up. This was a big green candle here. We're bumping right up against this area resistance at 117.17-ish right now. So the top of the consolidation range, but a surprise move on the U.S. Treasury bonds, at least for me. And I don't know, I don't want to put words in the deli's mouth, but maybe his as well. Let's take a look at the targets too. Look at that point of control. It's top heavy. This is a capital P-shaped volume profile. This is when that news came out on ADP. Boom, we just really hit it hard. Point of control is very prominent. It's a very large bar. There's another bar below it that's almost as big, but this is kind of the zone, right? This is the magnet zone at 117.15, just below that JAX 1 level, which is a really important JAX level. We didn't get to that one-day max, but if we get any more momentum on the upside or any more bad news on the jobless front, maybe we wouldn't get that 117.21 or even that R2. So, but right now this is pretty sticky up here and plenty of separation between price and VWAP. That is end of morning edge report. We are going to take a lunch break. Again, appreciate everybody being here with us for sure. We're going to be back with Leo the Big Cat is going to be trading the close with Farm. We have not seen him trade live yet, so it's going to be an exciting time. Of course, me and Shai will be back as well. So in the meantime, have a great lunch, relax, and we look forward to seeing you this afternoon.
Hey guys, I'm excited to introduce you
Stop filled. Order filled. Order filled. Order filled. Order filled.
Good afternoon, everybody. Welcome to Ninja Trader Live. My name is Jim Kagina. I am Senior Market Strategist, leading off for Shai, who is not with us this afternoon, but let's get right into an edge report. Let's take a look at the E-mini S&P. Remember, today is a bank holiday and Veterans Day. So to all our veterans out there, thank you for your service. Happy Veterans Day. Let's start with the E-mini S&P right now. This is a 30-minute candle chart. You can see, we're trading at the highs of the day, so it didn't really matter that the banks are closed. They are bidding this thing up. Right now, we're hitting that JAX 2 level, and we've hit that JAX 2 level for 1, 2, 3, 4 candles in a row. That's 2 hours worth of price action right there. 68.75 is that level. The next level up is 0 DTE call resistance and 0 DTE gamma wall, and that's at 68.85. Above that, we have R1 as the target. Above that, we have JAX 1 and a blind spot 4. These are Menthor Q levels. 6,900, and then finally the one-day max is all the way up here at 69.18, give or take a couple ticks. The volume profile is a little funky today. It's a double distribution kind of in the making. I mean, right now we have a volume node up here based on these last 4 candles with the competing point of control at 68.73, give or take, right where my crosshairs eyes. The official point of control, though, the one that's going to make the record books, is down here at 68.39 right now. So a lot of price separation between the two. We're well above the initial balance right now. We kind of broke out to one side. A double break of this
Order
thing
filled.
based on a candle close is very unlikely at this point. The pivot is framing the bottom of the conversation today. That's where support is at 68.31. Seems to be in the rear view mirror for the rest of the day. So the E-mini S&P and the stock index futures are strong right now. Well, let's take a look at the NASI though. Let's take a look at the NASDAQ. I might have spoke too soon. Let's see what it looks like. Come on. Yeah, it's not looking as chipper for sure, but a decent kind of movement. We have this JAX 1 at the top of this is resistance up here, and that's around 25,750. Right now we have a kind of a drive back up to a 25,700 level. That's an old PAX line right there. Point of control, again, this is not a good volume profile. 1, 2, 3 volume nodes, maybe 4 volume nodes right now. So it's not a very mature bell-shaped curve in reality. We are trading above value though, prices above value so far. So a little bit of a bullish sign, separation between price and session VWAP. As we speak, official point of control again is right. It's getting close to VWAP. We see that a lot at the end of the day, where that session point of control and the VWAP kind of converge. Should this thing break down, JAX 2 is going to kind of frame the conversation down around 25,500. So a little bit weaker for whatever reason in the NQ. I want to remind everybody this market info tool, I'll go ahead and put a link in for anybody who's using the desktop. It has some really good stats. It rests right on your chart. And in particular, you could set an ATR for this particular market and a percent of range. when this thing's rolling over. And then if you click in the upper left, it brings you a little information box, right? And you can read a little bit about the NASDAQ, the tick size, and what the notional value is, and then the ATR and the ATR risk. Should you hit the whole ATR high to low, either on a positive or a negative note, that's how much that move is worth. So kind of handy tool. I'll go ahead and cut and paste that into the chat a little bit later on. Let's cruise over to the Bitcoin. Bitcoin, if I could find it, it's going to be somewhere on my market analyzer. I'm going to click. All my charts are synced together here, so I click on the market analyzer and I pop open a new one. This is not looking so good. I mean, right now we've kind of hit the bottom, hitting the bottom, digging at the bottom here, and just kind of hitting rock bottom. Point of control right down here at that 1-day min. No surprise there at 103,640. The last several bars, this has just kind of been sideways. Not a lot of stuff happened in this last several bars in the Bitcoin market. Not surprised. A lot of the action happened around midnight, right leading into the London initial balance, and then again pre-market here in the U.S. So a little bit of risk off on the Bitcoin right now. The big surprise of the day, though, is the 30-year Treasury bonds. I'm going to pull those up. We talked about this early this morning, 8 o'clock a.m. in the morning. That seemed like a century ago. But I mean, look at this. This is the ADP payroll number, that interim number that they're throwing out there that Tracy was talking about. This big green bar, right? We were flatlined. Banks are closed. No one's trading. The cash market's not open. And this thing is trading nothing burger, no range, no anything. Boom, that number hit. This market loved it, actually. So remember, there's an inverse relationship between price and yield. This thing caught a bid and stuck all the way up here at this JAX 1 level, which is 117 and 16/30 seconds. That's the point of control. This is a substantial point of control. There's not even a competitor anywhere in sight. Probably done for the day on this particular market, but what will be interesting is when institutional investors do peek their heads in, probably starting tonight and into tomorrow's open. It'll be interesting to see where this market moves. Right now, this was a surprise move in my mind to the upside. We're still at 117 handle though, so we got a long way to go to break out of some longer term areas of consolidation. So that is this afternoon's Edge Report. We have a super special treat, trading the close with a first time live trading in the afternoon. We have Farm with us, who we usually see super early in the morning, and Leo, the big cat, is back. He was here this morning with us. Good to see you guys.
Jim, you didn't call out all the banger trades that I took this morning. That's unfortunate.
All right. Let me start over. Welcome to Ninja Trader Live, everybody. My name is Jim Cagnina, Senior Market Strategist. Leo had a banger trade this morning, everybody. Let's give him applause.
Just kidding. But that was nice.
That better?
That was nice. How are you guys doing? Good morning. Good afternoon, Jack. Good morning.
Good
Farm
day,
is
Jack.
here.
Yeah, look, Leo, they called me up last minute. It's kind of a last minute thing. They said, "Hey, Farm, Leo gets extremely, extremely lonely when he does his afternoon session, and we just need literally any warm body. Do you think you can sit in for a little bit?" And I said, "Okay, I'll keep him company for a little bit." So I'm the warm body, Leo.
I appreciate you coming on and being a warm body.
Oh, you're welcome. You're welcome.
But that's not true. Behind the scenes, it was very much like Hall of Fame voting. You got voted in the first vote, Farm. That's how it went down.
Right. For sure. Well, I'm kind of lucky that my wife happened to be able to keep the kids out of the house for a little bit. So they're off today. So otherwise it would be a little bit loud back here.
Yeah. No, I hear you. Well, afternoon's a
Your
lot of
kids have
fun.
off days?
It's a kind of holiday, man. Come on.
I got you.
Oh man. So what are you guys thinking about this afternoon? Let's start with you, Leo. What do you think? What's the tape looking like?
We are just at the top of the range here in both NQ and ES.
And you could share your screen too.
Oh, I can share. Okay, hang on just a second. Let me take care of that. Okay, so we're at the top of the range. In NQ after a bit of a look into that LVN. I think we actually shorted into those lows and covered at those lows. And from this LVN just kind of held us support. didn't really find anything lower than that. And so, we found ourselves kind of walk up all the way back through the open and right to the V range high. That's a OFL tool. And, kind of reject from those 25,700s essentially. And we're just kind of hanging out. I don't have a high confidence trade here to take, but if we get one, I know that farm is going to take it. I'm just going to call the
Right.
trade.
Right. So Leo actually asked me before we came on. He said, "Look, farm, whatever you do, please don't show the calves because my wife watches these and she's never going to look at me the same way afterwards." Yours are just the right size, buddy, I'm sure.
Oh
Mhm.
my God. All right, then. It's better to have this in the afternoon than first thing in the morning, Leo. Believe me.
Yes, I agree.
So, Farm, what are you thinking about price action this afternoon?
Yeah, I mean, okay, look, so yesterday we came, we looking at my charts? Okay, so let's go to ES real quick. And I got to keep in mind, is it split? It's not split, so you can see. And I have not updated all my charts, but yesterday, where's yesterday here? So we basically had come in overnight to sort of this LVN here, just below the meat of this upper distribution from last week. So caught an upper edge of this sort of primary distribution. NQ had come up to last week's volume point of control on a spike, which is generally ill-advised, I would say. So I was looking for weakness into this morning. We got that. And I wanted to see basically a value traverse on either NQ or ES. That basically NQ's perspective. You're talking depending on your chart and how you have your value areas formatted, but you can see top of value here runs down effectively to value area low from yesterday. ES didn't even come close. And naturally I had picked ES to short overnight, right? So that's why ES didn't come close. So we got it on NQ, so that's fine. So to me, it's a good opportunity to cover shorts regardless of whether you are short ES or NQ. Get the responsive buyers came in at an area that really protected yesterday's low, right? I mean, you can see the aggressive bid that came out of there yesterday. So generally not looking to be too short into that spot for sure. But yeah, ES was kind of a pain in the ass. Like YM has been crazy strong. I don't know what the hell that thing's doing today. But like RSP was fine. RTY is a piece of shit. So, I mean, of course, it was weak all day in the morning. But yeah, like you've got one of these days where now NQ is markedly weaker than ES driven by YM. And it's like, is that going to last all day? Is that going to last tomorrow? I feel like we need the Qs to bid to really find this to be a durable pump. Otherwise, it's just going to end up being a farm pump. So, which is very brief in duration. So that's where it's there. I agree. Like on a day like today, bank holiday, if you get a trade in the morning, like just be done. And especially with this conflict here, like how do you want to short ES sitting up there at the highs? Like you don't want to long it either. And then, NQ is weaker, but also up at range highs. But like you kind of don't want to short NQ with ES being on the moon right now. So that's kind of where I'm at today. I feel like most of the move is done for today with that NQ value area traverse. And that was a trade I was looking for. And that was the trade we got.
There you have it. All right, guys. Chat, thank you for being here. Everybody listening, whether you're in the chat or not, thank you for listening to Ninja Trader Live. Appreciate the thumbs up. We appreciate the subscriptions. It's easy to do. It's free. There's a little button there. You just click on it. We greatly appreciate that. But thanks for being super cool in the chat, being part of our community, best trading community I've been involved in. I've been involved in a lot of them for a lot of years. So you guys are in the right place at the right time, and you're in good hands with Farm and Leo. Gentlemen, I'm going to dip in the chat. I wish you the best of luck on any trades that you may stumble across.
Thanks, Jim.
Thanks, Jim. Take it easy.
You're going to leave me all alone with farm now.
It's trouble. Hey, Bobby in chat just made a good point. He said it might be a good opportunity to look for a long at the G period singles On ES, I would assume he's referring to at the G spot. So G period singles. What do we got? ES, call it
It's always sexual
58.
innuendos with you, Farm.
Not always. Yeah. Okay. Always. Like what, 58, 64 range on ES. So you could look for a responsive bid on NQ if you prefer to trade NQ. I like to trade whatever I feel like trading, but I do look at both. Do you look at you just kind of look at both for big picture decision making, right, Leo? Or do you
Like if I'm
pull the trigger?
about to take a if I'm about to take a trade in NQ, I may glance over at the ES profile and DOM just to see where it's at in relation to NQ. That's about it.
Got it. Yeah, sometimes I will straight up take a trade off NQ just based on ES because I'm weird like that. Not usually. Not usually.
You'll
Not
take a
not on
trade
today's on NQ
on NQ
based on
based on
yes.
yeah.
Yes.
That makes sense. The problem with that is when there's that divergence, like you talked
Today.
about.
Today.
Yeah, exactly.
Yeah.
Well, there's a huge problem with that. It just fucking
Yeah.
happened today. So,
And today's low
But,
on ES is an absolute piece of shit, which is why it's probably the generational low because this is a trash market and it loves these trash lows.
oh yeah, I love those poor lows.
If we could get it tomorrow, though, that'd be fantastic.
Yeah. Yeah, I'm waiting for my
Order
NQ to
filled.
update. I have this profile on my higher time
Order
frame
filled.
chart that it takes quite a while to load because it's 4 weeks of tick data. And I just made the mistake of changing that to a 30-minute chart instead of a 60-minute, and it's having a nervous breakdown right now
Excellent. Excellent. See you in a few hours then.
in the middle of the day. There we go. It's back. Okay. Yeah, so nothing, there's a little bit of an LVN here on that rolling profile. I mean, it makes sense that we kind of paused at 700. It was also a level from last week. Was that not last week, but the week before that was a
It
swing
was
low.
the
It was a
the
swing
overnight low. It
Yep.
was the overnight low, the 26 on the monster gap.
Yep. So it makes sense to kind of sell out there. There's a bunch of offers that are or were just kind of chilling at 676 and just kind of in this range. You can see a lot of passive activity here, kind of what appears to have happened, just from my vantage point here is that, from this rally, from this mid to here, there was a lot of passive offer activity. And, when we first came on the show, there was tons of offers, just sitting up in these 670s. Just some of them got filled and some of them didn't. But, it's just like, do you really want to slowly like sell into a slow market? That's near high of days. And at the end of the day, I guess like I would just prefer to find a decent spot to get long, for an end of day trade. But I'm not sure it's going to pull back hard enough for me to get interested in that.
Yeah, I mean, I would agree actually with Bobby said, looking at those singles on ES. And it looks like, yeah, I mean, if we just like go straight sideways, which we could for like an hour and put in like 2 more periods, just chilling in this range. One of the late day trades that I like to take, let's go to the 30 ES. My disgusting pig chart, which I have not fully updated. All right, so we've got multiple periods of chop with higher lows and then relative equal highs. I would like, I'm not calling for it, but what I like to see on this is rug these buyers, okay, all these lower wicks, come in here, dip into these singles, and then reclaim the lows of like, let's say 64. So let's just say like 64, basically like yesterday's high, right? It was like 64, 65. So you could come in here, make an attempt to fill the singles from sellers late into the day. They can't get it done, reverses back above 64, 65, and then take it into potentially a spike up really into the close. That's something that I would just kind of keep on my radar for later. When I see this shit, these lows just look like they're begging to be run to me, and it's forming a potential multi-period balance. And then very often late in the day, I will see an attempt from sellers to fill singles, which, we know since sellers suck, fails at least 69% of the time, and then just runs up to new high a day. So like something like that, maybe would interest me, but other
Yeah.
than that, this looks gross.
Yeah, I agree. So now that we've kind of framed potential trades, what the hell are we going to do until something shows up?
Tell some jokes, buddy.
You got jokes, dad jokes, like proper dad jokes?
I don't know. I
We
feel
need
like I'm off
Job.
my game today.
Job is dad joke. He is the dad joke king.
Let's look at some questions here. That's what we'll do. We'll take questions.
AMA.
Yeah, why not? Yeah, the drift of death. That's exactly right. Got one for you in there, Leo.
Okay, so the volume profile on the far right of my chart. Okay, so you can do the same thing with the NinjaTrader. This version is one that we built because that has quite a bit of customization. I know what you're talking about. I just don't remember how to get it in the far right margin. So Frank, I'm sorry, but I don't know how to answer your question.
You so
Maybe,
busted.
maybe there's somebody in the chat that can throw up a guide to the NinjaTrader volume profile. Crash course or guide.
Question for me about levels. So I do weekly levels, and honestly, more than anything, I mean, sometimes they work as and hold to the tick, but generally for me, they're more like guideposts, right? Like if you have a major LVN in a weekly profile, you kind of want to know where that's at. So like to me, that's likely to be a weekly level. They're not all volume profile levels. Some of my levels
Order filled.
supply and demand price, or some other reason I have for a level. And then each day, to me, frames how I want to interact around those spots. So coming into a week, you have no daily profiles, right, other than Fridays. And so I'm working off of the prior week's profile, and I'm working off of Friday's profile to take trades on Monday. And then coming into Tuesday, I've got Monday's profile to work off of, along with the prior week's profile. And I would say that takes most of, the structuring of my trades are going to be based around that. Now, after Tuesday, like you start to get some information or decent information about the week's developing profile. And so like Tuesday, Wednesday, now I start looking at how, the week's developing profile interacts with the prior week's, interacts with each day's. So I can have levels on my chart, if it's a weekly level that I don't even care about in a given day, right? And so that's where like my daily plans are looking at, where are the best places when I look at the prior day's profile, when I look at the prior week or the developing week profile, where to me are the best places potentially to interact, and what am I looking for? What do I want to see happen? And so it's not so much about like, oh, hey, it's above this level, I'm long, it's below this level, I'm short. It might be, but generally, I'm just using that as sort of guideposts on the weekly levels, and then looking to see how the daily profiles interact with that, how I want to interact.
Order filled. Order filled. Order filled.
Just about
Order
like my
filled.
process on
Order
stuff.
filled. Order filled.
You and I are not, you're not cut from too far of a different cloth.
A lot of us profile traders.
Order
have
rejected.
some
Order filled.
similarities, anyways, right? Maybe different types of trades that we like to take, maybe similar. You use different intraday tools than I
My
do.
calves might be smaller, apparently.
I don't know. Your intraday calves are probably pretty good. You're probably a lot better scalper than I am. I would have to guess that. That's not really my style. I like to see something. Like I want to see like, okay, here's what it's gonna do, right? Like that, like I just mentioned, that 30-minute chart on ES, which I'll pull back up just so Leo can have another seizure looking at my chart and the colors. Like, I mean, I just see that setting up, and I'm like, okay, I might be, and I don't even like it that much, to be honest. Like, that's not even like really my style trade necessarily. Up here towards range high, taking a potential, attempt for sellers to fill the singles and then taking it into spike up. It's not like my jam, but like I want to see something ahead of time. And so to me, I'm very, very rarely taking like some kind of reactive trade, like, oh wow, look at that seller there. Unless it's a spot that I'm looking at to begin with, right? Like so today on NQ, for example, I'm not even on NQ anymore. I was looking for 469 to 485 to potentially bid again. I mentioned that a little bit earlier, right? You saw how price was lifted from that area, basically just leaves behind, some demand from my perspective. And so I was looking for, maybe sellers to get out of line and put some volume into that spot that gets brick walled. So then when I see that, that would be the order flow information that I am looking for at that area, at a spot where I'm interested to take a trade anyway. So for me, it's like area of interest, what's the setup, and then why am I pressing this button? And if all three of those aren't there,
so from an execution standpoint, were you watching the time and sales? Like, do you watch any of the, I guess, order flow activity?
any order for traders out there are going to have a conniption fit here.
No, I'm just asking questions.
Yeah,
I'm
yeah,
not,
no.
yeah. I mean,
Here's what I'm looking at. Okay, so I'll give you an example. Right. So I effectively see what I need to see in order flow looking at candles and looking at volume. And so imagine you have a candle. Like what makes price move, right? If there's 10,000 lots on the offer, it doesn't necessarily make price go down on the downtick, right? I mean, somebody needs the market sell, right? And so if I'm looking at a candle, like say you have a candle, it's a 1 minute candle, and its range is exactly 2 ticks. There's an uptick and there's a downtick, and you're coming into a swing low in an area of interest. And let's say relative volume, let's say NQ has been like, I don't know, 400 contracts or whatever per minute. And then I see, and this wasn't a good example, but let's say that price sits on the downtick for that entire minute of that entire candle, and the volume is screaming through the roof. Well, what must be happening in order for the price to remain on the downtick and volume to be screaming? Well, some asshole must be market selling to somebody with some enormous calves. And so I'm looking for specific things like that. So I'll see absorption in that way. I want to see a lot of volume being put in and price not going lower, right? So it's the same thing that you would be looking at with time and sales, but I'm looking to see effort that does not meet result at a key area where I'm looking to engage anyway. And I happen over time, I had to train myself to be able to just see that with time-based candles and volume.
I'm not judging you. I mean, there's nothing wrong with what you just said.
Oh, I know. But yeah, I know the order flow once again crowd would flip their shit. But that's basically, I mean, you can see the volume peak into this low, and you already saw. I mean, you obviously saw responsive buying there to begin with. We were coming into the prior day's value area low. We were coming into that area that I pointed out where buyers had lifted it. They'd been very responsive the day before. So this is exactly what I'm looking for to get long, is to see an effort made from a seller, get a little bit off sides, and just sort of jam it into the glory hole and find a piranha on the other side, and then see the responsive buying turn on after that. So that's exactly what I'm looking for.
So many words, Farm.
Somebody stop me.
I'm so scared. Leah, would the profile with the negative and positive numbers red and blue be equivalent to market depth, or it's delta? So this is delta. So basically, like if you looked at this profile, right, and you subtracted the ask volume minus the bid volume, the delta of that information is what's shown here.
So Leo, in my example of price sitting on the downtick and volume shooting through the roof for an entire minute, what would your chart look like then?
So we actually saw this activity down at 490s this morning. What you would see is like, we're trading into a low, just pretend, and this delta profile would just shoot over to the left with just a bunch of blue delta. So like, and if you were watching the time and sales, you would see the tape just light up, from buyers. The counter to that would be like a consolidation area like this. This was actually interesting because we were watching this morning, right before we got off stream after we took this short, was this little consolidation. There was just tons of just offer delta right here. But what I told the chat is like, this is not really an A+ trade because while there's absorption, buyers are lifting, but and prices going sideways, typically you would look for a continuation lower.
Stop filled.
And while that did happen for a split second, the opposite actually happened as the market just took off from there. So, but you can see clearly that this was kind of the decision point for the rest of the day. We left that area and said, peace out. And that for me is there's so much context in there, knowing, what the dominant or the passive side of the book was doing. And when we left, it just, we just took off.
Very nice.
Order filled.
It's fine, Farm. I can deal with the fact that when you say order flow, you don't actually mean order flow. You can just, it's fine.
It's
I don't.
the same idea. You want to see. You want to see what you want to see.
Just making content.
Gotta have a. Oh, I know. You gotta have a reason to press that button.
Yeah, for sure.
We'll all agree on that.
Yeah.
Right. So people are all about like my level.
This way's better. My level's this.
Mhm.
Da da da.
And then like, what do you do with your levels? And it's like, well, I mean, there comes a point where you have to learn for yourself when to press the button. And I feel like that's pretty personal to everybody, right? I mean, everybody has their different method, what they look at, like what they want to see. And that's fine, right? Like you don't need to do anything the Leo way or the farm way.
Yeah. And it's not just like pressing, it's not just like knowing when to press the button, but when it's worth pressing the button is also part of it too.
Yeah.
Like for me right now, it's not worth pressing anything except for the button that like makes new coffee.
Yeah. Yeah, I agree with that. I always ask myself, or try to ask myself before taking a trade, like, how does this compare to my last banger trade, right? Like, so Leo, you hit 100 handles on the short side down there today. So like, how does anything right now compare to that? And I think you would say, well, it's shit. And so that's kind of what goes through my head when I'm like, because we're all addicts, I'm sure, on some level, right? Like we get that compulsive need to press the button. And so I try to pause and say, okay, well, look, asshole, like, is this any good, right? And how does this compare to the last banger? And if it's just isn't as good or isn't close to as good, then I just, try not to press the button, call my sponsor and say, help me, man. I'm gonna press this button and it's a shitty trade.
Oh, that's crazy.
Yeah, no, seriously, just some trade. Let's just hop on over and just like screw around. Try not to go too crazy with my language here, but yeah, I mean, when it gets like this,
Well,
not for me.
Farm, the afternoon is a little bit like, the morning is professional. It's G-rated. Fridays are R-rated because it's PAX Friday. The afternoons are kind of an in-between. So you can drop, you can drop a little
Order rejected
spicy word here and there. And I don't mean, you know what I mean. I don't mean that.
I know what you mean. Speaking of PAX,
Order
I'll tell you a
filled.
funny story. You weren't in Florida, so I don't think I told you
Order
this, but
filled.
This was hilarious.
Order
Remember
filled.
that first day. that
Order
PAX
filled.
did
Order
on Friday?
filled. Order filled.
I don't
Yes.
know if
Order
you watched
filled.
it. You watched
His
that?
first
Okay,
Friday show? Yeah.
Yeah.
Order
so
filled.
his energy-
Order filled.
So his energy is like pretty high.
Order filled.
And
Order filled.
I was watching that back because I missed it that day. I accidentally had 1.2x on.
Order filled.
rejected.
While I was watching that. And I didn't realize it. And I was like, holy shit, no wonder this guy almost died. Like he is hyped up, ready to go. And like, I was like, my heart's all pumping. I'm like, what the hell? And then I was like, oh, it's 1.2x. It wasn't a whole lot slower at 1x. That was definitely not my type of trading. I definitely like to take my time and see things developing, see things setting up. And then I also like to hold trades for a while if I can. I love round tripping runners. That's my jam.
Hey, somebody said can't find the OFL free tools, the premium tools. Steve, I'm gonna have the Ninja Trader team send you a link in the chat. It will take you directly to the free tools. So it's literally you can just install the stuff right from there. Saw you were having a hard time. Thought it'd be easier just to give you the link. Super easy. Still waiting on NT merch. Is NT gonna get into the merch game?
My brother in Christ, will you just look at my shirt, man? Come on. What you doing?
It's
Got this
black.
hoodie. It's NT hoodie. Ninja Trader hat. I guess you probably can't tell because it's black.
Also, Farm, just as an FYI, we have only 113 likes here in this on this stream. That is probably far, far, way too low. Jim might not even let us get off the show at the end.
I'm never going to be invited back. That's for sure.
So if you can
Understandable.
throw up a like, hit the subscribe button. It helps the network get more people watching the stream, getting involved, et cetera, et cetera. Farm won't tell you that he sends DMs me to get screenshots of your Delta.
That's actually true. Once, yeah, it was true. It might have been last night. That might have been last night. I was like, because I wanted to see what a spot look, if what I saw kind of matched up with what your tools saw, and if I remember correctly, it aligned very, very nicely. Very nicely.
You can use them if you'd like, Farm.
We talked about this. We did.
I'll let you.
Let's get it done. Let's get it done.
If you're just secretly asking all your friends to give you screenshots,
all the time,
you can also ask me. You can DM me. It's fine.
Well, look, I asked.
So you're legit, like your closet order flow curious, like legit order flow curious.
Oh, I'm definitely curious. I'm definitely curious. But look, I was embarrassed. I asked Johnny to ask Drew to ask Leo about the order flow tool. I was just very, very shy and didn't want to come directly to you. No, I really just wanted to see it that one day. But I'm going to pop it on. I'm definitely going to pop those tools on my Ninja chart in the near future. We talked about this.
Yeah, we're making some optimizations for speed that are incredible. Once we get those done, I will absolutely be happy to share them with you.
Because again, I think what a lot of people struggle with is that reason to press the button, right? I mean, everybody's levels are the best, and everybody is an amazing trader, but it really is knowing when to press the button, not when to press the button, that I think helps, and a lot of your tools are great for that.
Do you want to see more of Farm and Leo together?
I'm saying no.
Oh.
Where's no? Why is there not a C? No, I don't want to see this fat guy on the stream again. Hit the like button if Farm looks fat and black. Everybody,
brother,
get those likes up.
What's that, brother? That's what happens when the backstage production is like, you're gonna get that sticker, right? Hey, are you ready for a call? You got a sec for a chat?
This is brutal, Leo. I mean, what do you expect? Come on, it's Veterans Day. It's the afternoon. All the fun happened overnight and this morning.
You know what? I forgot to mention that. If you're a veteran, you're out there watching the stream, thank you for your service to the country. My grandfather was a veteran, was in World War II. I had a couple of uncles in the military, and I just want to say thank you to the veterans out there. So I appreciate that. I appreciate your service to our country.
I would like to reiterate that, except most of my family were draft dodging chicken shits. So thank you to those who were not. In all seriousness, I was, being 4'6", I was never really cut out for the military, but I almost went to the Naval Academy, but it would definitely not have been for flying planes because I can't reach the pedals, man. What can I tell you?
Hassan, I don't speak Spanish, my friend, so I can't read what you wrote. So glad you tuned into the stream to watch this tape die.
Yeah.
Hey.
Pace is just absolutely anemic.
Yeah, look at the volume on your chart go from decent to. They're gonna clip that. I know it.
What?
They're gonna clip
Let's
that,
look
man.
XY. XY will be back tomorrow. Pretty sure. So tomorrow, here's the thing. I'll be back on with Kane in the morning. I'm not. I think Nick's doing Wednesday. Nick's doing midday tomorrow. So it'll be me, Kane, and then Nick, and then I can't remember who's doing tomorrow afternoon. And then I think XYZ will be on Thursday. So XY will be back from Japan tomorrow.
Take a ball. Just quick rug, and then go. I still am not even interested. Let's let somebody jam some volume up here into 79.80. Get that volume counter up to like 6,000 in a minute, which will never happen today. And then punish. And then punish him. Run these stops and then run it back up. Nothing fun like that's going to happen. There's a rule if I'm watching, nothing fun's going to happen. I kid you not, every day I'm like, hey guys,
Order
good
filled.
news. I'm leaving for the afternoon. This was like right here. Like I'm not even kidding. It was like right here. Like something fun's going to happen. Get ready for it. So we'll see if they do this.
I'm pretty much with the nothing ever happens crowd. Which means, any sell off is usually just bought up. That's not like a lazy statement for me. I think it's just the fact that, the majority of the time charts are going up and to the right. I love a great sell though, I love an exciting sell off where you can just short it into the, you get all your anger out and you just ride that missile down until they squeeze it right back in your face.
Yeah.
If you've never been squeezed out of a market, are you really a trader?
That's right. That's right. You got to know when to cover a few at least, right? When you're short, learn that real fast.
We got a generational 4% pullback finally in 6 months. That's right.
Yeah, we did.
You got any opinions on where we are from a higher time frame? We're kind of in the middle of the leg down, right? So this is kind of the half back. The middle from the high to the low, from the recent swing low on the daily. You have any?
Yeah, I mean,
any thoughts?
obviously, ES has retraced far more than NQ has here, right?
Okay, I haven't
Most
even
of the
looked
way
at
back
ES,
up to the
so,
highs.
yeah.
Let's pull up the 30s real quick. I'm looking at the other charts, but if you just look at the last couple of weeks here, and again, apologize, I haven't updated these charts, but I mean, ES doesn't, to me, doesn't have a whole lot in front of it, right? I mean, finding acceptance, I mean, I think it's a little too early for this just yet.
Yeah.
But I mean, you're coming back up and like what's left to me. Whereas NQ, not what's the hell? Farm, God, stop being such a boomer. NQ's got a little bit further to go. I'd want to see back up these 969, let's say. But I mean, really still, you get in the meat of this distribution and it's kind of game over. So ES has come a little bit closer. And then I would say, I mean, like big picture. I mean, if this doesn't, I don't know. I'm just not sure that's game over yet. I mean, it sure looks like it on ES, but not really convinced. We have a shit high on both, right? Are they both ETH? I forget. I think they're both ETH highs.
NQ, no. Well, my daily chart only has
NQ is ETH.
My daily chart only has. I don't know the answer. It is. You said it is ETH.
Yeah, it is 399. What that was? What the hell day was that?
26,400 was the high.
11:30 p.m. on the 29th. Looks like. So I mean, the highs are shit. And then ES was like it had taken the RTH high by like, I don't know, a tick or something like that, and then went
Yeah.
to hell. But I mean, like big picture on ES, I know I've got something in like the 7260s or some shit, which like I hope we don't get because I'm looking to buy at zero because I feel like that's fair value and I can buy a lot at zero. I haven't done the math to figure out exactly how much I can buy at zero, but I know that it's a lot. So I would like to see that. But, it looks like, any hopes of selling into the end of the year maybe are dashed. But like today's a holiday, obviously. Some of the data this morning was like that ADP pre-release or whatever the hell it was, not super bullish. So you never know.
Look at that. You look at that stuff.
I do once in a while,
You're
but
gonna you're gonna have to train me.
I'm mostly looking to see like how price responds, but I'm also looking at other markets too. Like, for example, if you looked at 6J, so the yen, you know what that one is. I think you've mentioned that one before. Maybe
6E.
Maybe you mentioned six. No,
6E?
yeah, it was 6E that you knew. So no, 6J is just the yen, right? If you looked last week during the sell and you pulled up a chart, you just pull the VIX against 6J, it was the same chart on short time frames. On like the 5 minute, it was the same chart. So like to me, that's what the market was responding to at that time. Why? I don't know. I'm a macro moron, but like it was, so I pay attention to it. So
Do you know who the
when
best macro trader of all time is?
go for it.
Nick for a tick.
Nice. Very nice. So yeah, I mean, I look at it, but I'm more looking to see how the market responds. I said on Sunday night, not this last one because I wasn't on. I was up north with the fam, but the one before, I feel like December and QT ending is a gift for bears. And just I'm going to say this like every day, every opportunity I get the chance. And I don't mean that to suggest that it means that bears get to short it when QT ends. What I mean is that the market at this point, with the government reopening, and there, in theory, should be a liquidity impulse with that, QT ending, the market has no excuse not to rally into the end of the year. It's an up year, like all that same shit, Santa Claus, all the good stuff, has no excuse. And so to me, it's a gift for sellers. If we just go moonshot, it's a gift because you just like go back to sleep, for a month and you don't try to fight it.
You're giving me an anxiety attack talking about this market trading, like grinding into all-time highs for the rest of the year.
Yeah, that would sound disgusting, wouldn't it? But if it does not really take off to me, like now into the end of the year, then I think this is going to be a big sell in January, and that would be good fun. So it's a gift either way. You either just stay the hell away and you don't blow up your account, or you look forward to getting to short this piggy.
You just buy it, all the dips, not financial advice. Buy all the dips till the end of the year and then short the piss out of it for the
Maybe
2026.
Well, if you remember last year, everybody and their mom was calling for this huge rally in December. And that is not what happened. That is not what happened at all. It was weak going into OPEX. And then I'll never forget that day on OPEX. That was the big nuke. And like that, to me, the top was in. I mean, we made higher highs on ES slightly. We made higher highs on SPX and QQQ. NQ did not make a higher high on a non-back adjusted chart, if I remember correctly, even into February 18th. And so that's the kind of thing that I would be looking for, is if December is weak, it probably does not bode well. I mean, there definitely has been distribution to me by my eyes in that 6-week range.
Yeah.
But I always felt, I mean, there always is, right? Like it's a 6-week range, right? Like people are taking profit and other people are taking the buy side, right? And so as long as within any range, it's always the same. So as long as there's enough buyers to soak the selling and then ultimately lift the highs for a breakout, then fine, we go higher. But there definitely was. And my suspicion was that this, no two tops going to look the same. And I'm not necessarily calling for a top, but no two tops, if it was going to look the same. And so it was very unlikely. so last year looked exactly like 2022. Do you remember that one, Leo? How it was like November,
Yep.
December, January, whatever it was. It was the same exact topping process. RTY was first, and then ES and NQ. NQ went kind of next, right? And then it was the same like 3-month process of distribution, with nominal higher highs or no higher highs. And this one, it kind of made sense. I was looking for like a divergent weak higher high. Like we kind of got that, but now we have this shit, ETH high, which again, like this market is such steaming trash the last year or so. Like maybe it's the top for that reason. It's just so bad that you and I are like, I don't want to short this. The high's no good. And then we just rug 10% or something. I was kind of waiting for that to happen, to be honest, but
Yeah.
here we are. So we'll see. It's all going to be about December. Like Bitcoin looks like shit. Like, I mean, it seems like just 3 weeks ago, all the macro accounts were talking about how, liquidity is just endless and we're going to the moon and blow off tops coming. And this has been the shittiest blow off top I have ever seen. I'll tell you that right now.
Yeah. I'm a macro, ignorant. So I just come in and trade the levels. I know that sounds kind of silly. Even though I have this economic calendar, it's only to know about when things are happening, not what the results are or anything like that.
Question was,
When is the book
my-
going to get thin, and when do I need to be aware of, specific market activity? Man, if I had to reach out for a trade right now, it'd be shorting 670s, but I just don't have the maybe I don't even have the will to put this trade on right now.
let's see, question
like
about 41 to 55. I think 41 to 45 on my chart.
Anytime I hear someone talk like this, their trading has just been shit.
Talk like what?
I don't know. I don't know. I am for me, macroeconomic, it's almost like I can be easily influenced by two things, and it's macroeconomic conditions from my perspective have been super weak for over 2 years, but the market keeps going up. And I mean, this is just anecdotal, friends, job market stuff. I think it's the underlying economy is not necessarily as strong as it apparently is. If I traded that opinion, I would be broke. The other thing that can influence me is my friends. And so sometimes your friends are right, sometimes your friends are wrong. And I've had to more or less like put my own thoughts and trading into a box and just kind of ignore kind of what everyone else says, because I could easily hear or see somebody's tweet and be like, oh yeah, that's a great point. Let's get fucking short, blah, blah, blah. And just totally miss and miff up my whole day because of those things. So that's kind of why as an intraday trader, I just kind of ignore all that stuff and only care about when those events, when the economic releases come out.
Yeah. Yeah, and I think the question, my comment about trash market, I don't mean the markets have been bad to trade.
Yeah.
I just mean if you're kind of a market profile purist and you're looking for an excess high and an excess low all the time, and like you're not getting that anymore. So it's just a little bit different. And I think a lot of that has to do with 0-day options. You get a lot more poor lows as maybe you have some kind of gamma banana vana spot sitting into a low, and you get a lot of selling into that. Dealers are taking the other side of that, and it just doesn't go. Sellers gas out. You get a nice rally. So you really actually just have to be more open-minded. than being a purist. And to me, we joke about it being trash, but I also joke about people that are a little bit too stuck in their ways and looking for that perfect high or that perfect low. So it's a little bit of a joke. The market has been fantastic to trade, but yeah, if you're always looking for that perfect high or perfect low, you're probably going to get left ending and end up with nothing but your D in your hands. And hopefully your hands are very full at that point, but not for all of us. 2023 summer, 2024 summer, ETH highs, if I am not mistaken, on ES, and we sold off 10% or more both times. So anybody that is a purist is probably going to get spun around a little bit.
Yeah. Yeah, I don't really care when the highs are made.
I definitely feel more comfortable with it for sure. Like, because sometimes you just see one of those highs and you're like, oh shit, that's the high, or that's the low intraday. I mean, it always feels better, when you see something like that go in your direction for sure. But yeah, ultimately, does it like necessarily matter? No, because, you can end an auction one of two ways, a directional auction anyways, one of two ways. I mean, you could end the auction from your auction market theory purist terminology. You get an excess high and buyers walk away, sellers step in, they send it the other way, you get a reversal of direction, but also just new market generated information. So like if you happen to have a poor high in place and then like nukes fly or something, or whatever, there's some financial crisis, then this is probably going to be the high. So
yeah,
being a purist, ES really just didn't even take that preceding 30-minute low, did it? Just came right down and said, nah, I'm gonna hold in here.
Give me the yawns.
What a snooze.
The delta column is historical bid and ask difference similar to volume. Yes, that's correct. That is the calculation. How do you read the rebids and reoffers if they are not in the delta data? So one, the way this is calculated is from each leg. So this one specifically is from this leg, right? So here we have an impulse move up. Delta, we have the profile that's set from here and tracking it here. So all new information is being displayed plus the information from here. So it's a combination of historical and new information. And what are we seeing? We're seeing, tons of offer activity in this range. So you can just literally box this range out. Again, what's happening? We're going sideways. We have tons of offer delta from against this high, right? So for me, there's two ways I look at rebid or reoffer. One is a simple, yank, pull, like an impulse move. Where's the retracement of that move? Like, and when I say retracement, I don't mean the Fibonacci number or anything. I just mean like a pullback, right? What's a pullback? Well, for me, it's at least 50% and sometimes like 65, 70%. So somewhere in the 50 to 75% of this leg down, of this little impulse move down, I'd be looking for reoffers. So that's mechanically where I look. And then in the order flow right here on the leg to leg profile, you have it. And then the last place I would be looking is on the actual order book in the DOM. So you have the, price action kind of mechanical look at it. You have the delta leg to leg. And then for the final, real time information, this is real time, but it combines historical and real time because transactions are always happening. And then the last piece is that DOM. So pretty much the DOM activity. We talked about it as we were starting, is that there was just offers sitting at 70s, in these 70s to 80s. Hopefully that answers your question there.
Good stuff, Leo.
I just, this is what happens when you stare at screens for years and years and years. DOM activity. There's a running joke in the order flow trading community about we're just trading on vibes. And to be honest with you, there's an element of truth to that with the fact that anything that you're using from a DOM, time and sales, or other perspective is going to have a rhythm to it, right? It's going to have a certain pace. Just like if you're watching the stream, we've seen that we're basically just going up and down in a 20-point range, right? So that's a market state. So the state of the market right now is basically it's not doing anything. The same is also true for the DOM and the time and sales. There are states, and their states can be it's doing nothing, it's making a move, and that is also true with the order flow activity, right? The state could be neutral, it could be bearish, it could be bullish, and the order flow activity being bullish or bearish, that is more about pattern recognition than it is a specific sequence or a specific, 500 lots filled, 600 lots filled, etc. It's what is the activity when that happens? What are the other participants doing when that 1,000 lot order gets filled? When that 500 lot order gets filled? Do they replace them with more, or is it just one order? Is the tape, the pace of the tape, is it gone from really slow like it is now to extremely fast? Okay, that's a change in state. The state of the market has changed. All of that cannot be, I can't draw a line on the chart that says something happened here in the order flow. I can just tell you, you have to observe, be an observant of what's happening in the order flow, and then know when something's changed, but also by observing it, you kind of understand that rhythm and flow. You need price to go up. Do you want me to get short? It's usually a pretty good method to get the market to go up. New candle alert. We have a new candle.
I've got ES up just to look at those 30s. We can look at NQ though. It's a similar concept. It's just the weaker market here and doesn't have those singles, does it? What is today?
Yeah,
Tuesday?
I mean, gun to head, I would be short from those, the 670s, but yeah, it's just, I don't know, it's not a high.
How does it compare to your short earlier, Leo?
The short earlier was A plus.
Yeah,
They hit that, they hit this, if you're looking over here, this is the weekly. So if you just mark this level, and this is what I like about, some of this stuff is like this level right here represents the weekly VWAP, right? So like, I already know it's a reference point. It's not on this chart. I just, had the level. If you were watching the morning stream, we had just nothing but buying all the way up this little V here. And as soon as we hit the weekly VWAP, there was just a visceral reaction from sellers, and the tape just went blood red, and that delta profile went red. So there's two things: level of importance, change in order flow state, and there you go. So that's your two things, required, just like what you said earlier. Level, what's going to get me into the trade? So for me, that's A plus. This here is like C, I would say. Because the market is, it's slower. Yes, generally, end of day, generally, and this is like very generic statement, I think tends to revert off of extremes, right? So like if we're into end of day and we're just, kind of like this, there does seem to be kind of a bias, I think, for the market to kind of settle back into whatever range it was in for the day. But I don't really have patience to, wait and watch those things grind out.
Love it. You had a question. This is for you, Leo. The M period stat. ES made a new high a day in L, but NQ did
Oh.
not. How does that
Did
impact
it make
the
a
stat
new high in L?
on NQ?
Yes.
No. Yeah,
ES made a new high in the last 30 minutes.
sure, it did.
I mean, the stat is would make a new high in the day.
Yeah. And
It's
the question was, how does
70% of the time it works every time. You know.
69 fix it, Leo?
It's like
69%.
the real stat is 68, but I knew you would pull.
Come on, fix that shit.
It was a fucking softball. I was just trying to give it to you.
God. Well, the question was, how does it impact the stat if NQ did not, but ES did? Is it just independent? Like ES did it, so
I mean,
ES
both
is still
markets.
70%, or?
Yeah, both markets are about the same stat. So if you take it for what it is, right? It's one of those markets has done it. So it's maybe, yeah, for me, I wish I had known that because I may have taken that long. But for me, it's like if you get a little bit of a pullback and you have that stat, you might take a little scalp for it. For me,
Yeah, so
it's awareness, right? Like if I know that stat is in play, I may not try to short this thing.
I love it. I like that. Yeah, I mean, I had the 30 up. You can see it took the lows of a couple of periods. I would have preferred at least take this one, but still same concept, right? You run a few stops. You've got the L period or M period, whatever stat you like to call it. Is it the L period stat or the M period stat?
L period, yeah.
I would like, to me, I mean, if we then, guess we make this high on the 5. Really, if we had properly attempted to come back and fill in those singles, it would have been more interesting to me. And now at this point, I don't really want to see it. Like sellers took their shot. Now buyers kind of lifted or, whatever.
Hey,
but I would have.
We have a Chat GPT analysis of the market here. Per Chat
Excellent.
GPT, 1 minute showing lower highs and lower lows since 12/27. A micro downtrend is intact. Narrow body, lower close, long upper wick. Bulls tried but got absorbed, and sellers are pressing.
It's over. Sounds like
It's over.
That's what I heard. That's what I heard. It's over. Yeah, Bobby, 68 generational low, man. That's it. You'll never see prices lower than that again. It's unfortunate. We have had some pretty bizarre last 10 minutes, though, lately. I feel like the murder algo's been kind of on some special juice lately, doing some interesting things.
Yeah.
Maybe we'll get one of those today. Never know.
Do we have any earnings after the bell? Anything crazy? Earnings season's over.
I don't think so.
When is NVIDIA? Because NVIDIA is usually lagging like everyone else.
Yeah. No, that is got to be kind of soon. Let me see if I've got it here. $19th. Like the 19th. Ooh, Oklo. It's big news.
Wait, what? When? What?
The 19th is NVIDIA.
November 19th?
Yeah.
Dang.
Mm-hmm. So we got to wait till the 19th for generational top. Oh, bummer.
I was hoping that the Arena Cup final challenge was on the day after. That would be insane. Next week. Oklo. All right. I guess I should read the chat.
I bought generational lows on Oklo and paper handed the shit out of that. I mean, it was the best like long setup I had seen to that point in a while. It was beautiful. Bought it at I was like 9 something. And I think I sold it at 18 or something. I thought I was a genius. Whoopsie. Great trade. Those are the best. Yeah. It was just under 10 or whatever. It's wild.
There's a little bit here in it. NES walking this thing up. 6-7 at 71.
6-7?
71, yeah. 6-7.
I got 4 kids, man. It's horrible.
Brother, production doesn't like 6-7.
What's that, brother?
Brother, I saw a math teacher that had made all the answers to her quiz 6-7, just to mess with her students.
I like that. This is kind of painful.
Let's see. So we got on. Marco was here doing this. Cool. I love that for us. But how old are your kids? You have like 400 kids, right?
That I know of. Yeah, right?
Yeah.
I mean, that I know of.
How old are the kids that you know of?
Oh, gosh. 12, 7, 6, and 3.
12,
it's quite the
7,
spread.
6, and 3. 12, 7. Here's what I've got. 18, 6, and 5 months.
Yeah. Okay. You've got my spread beat for sure.
Mm-hmm.
I don't know though. The wife was looking at the Cavs the other day, and I was like, "No, not again. I can't do this again. Can't do this again."
Yeah, I don't know how you do for with the two we have. I mean, I say two because she's 18.
Yeah.
She's driving.
Yeah.
We're fighting for our life right now.
Right.
It's like just everything's harder. Bedtime is harder because we're trying to keep it quiet so that the 5-month-old can fall asleep and stay asleep, and then you're trying to get the 6-year-old to bed and stay in bed and not get out of bed 400 times without waking up the 5-month-old.
Yeah.
It's an incredible situation every night.
Those are good times, bedtime.
Mm.
Yeah, where is up north? So I live in Arizona, and so we have a place in northern Arizona, which I would like to take this moment to thank Palantir sellers at $6 for buying me this cabin. Appreciate the liquidity. It's a good trade.
Yeah. Palantir.
Yeah.
And
yeah.
I bought it at 7, sold it at 115, and the other day I saw it was at 200, and I wanted to puke.
Yeah. You did better than me. I kind of, a little bit better, I guess. I did 6 to 100. I had a reason for selling it because I wanted. Yeah, it is. It is. Got me a cabin. I got 4 kids, and we get to enjoy our time up there. And I've taken other names for 100% since then. So so I didn't hold Palantir for the extra 100%. Whatever.
Are you actively swing trading single names?
Currently not right now. I normally do, but I shut it down a couple of weeks ago for the same reason I shut it down a year ago. I won't get into too much of this, but a year ago I shut it down sensing that something was coming and I kind of needed my full attention on indices. That turned out to be a 3-month distribution process. I'm kind of doing the same thing here, just with all that's going on. It doesn't necessarily mean that I'm looking for a topping process to occur. Maybe it's a blow off top that we get. But I feel like the index has very, very much needed my attention. And that's the core of the service anyway. So, but I usually do. I like to pick off once in a while something juicy if there's a perfect setup on it. But I do. I definitely don't have time to look at 1,000 charts and screen and do all that kind of stuff. But once in a while, we'll pick something off for fun. We did Ion Q like 35 to 70 or whatever recently. Some other names here and there. I enjoy it. I just don't have that much time. We have this many kids. Once I'm done for the day, it's extracurriculars. It's bedtime, like you said, for 2 hours.
Yeah.
Can't exactly screen a lot of charts. So.
Yeah.
Yeah, no, I would prefer a new high, Phoenix, before get any kind of sell. But I definitely am not. I'm not willing to dismiss what we saw in that 6-week range, regardless of the fact that we made a higher high. It obviously was not some fantastic breakout of that 6-week range. We dipped back into it. So I think very, very important how this December goes, as I said earlier.
Mm-hmm.
Yeah, we did have APLD to Lowe's. That was a good one.
How do you narrow down the stocks you look at?
I mean, honestly, like I don't even screen. I don't even I don't run a screener. I've just got different sectors that I think might perform well and decent in certain situations, and I'll just honestly just memory go by a few. I don't have one of those memories like some of these guys, that are single name pickers that know just every equity every thrown out there. But I'll pick something in a sector and look at a few names, see what has the best setup. But I
Nice.
do really enjoy it. It's just the time to look at them over and chart them properly is that is no fun. So I don't do a whole lot of momentum. I'll look for reversals, like high time frame reversals, right? Like, maybe you form like a 5-week balance, right, on something with some kind of key high time frame LVN sitting right underneath that balance, and so I have a reason to look for that downside break to fail, and then try to take it to the other side, and then if it wants to give me more and an upside break, then that's great. And then if not, whatever. So I just try to look for those juicy ones, whatever it is. I don't care.
Right.
But it's going to be something like that. Like I'm looking for a trap like that.
Yeah. I really wish they would give us a trade, but I don't think they're going to give us one, Farm.
This was especially, I told you, if I'm ever looking, like that's why like you guys don't, not that I can be on here that much anyways for these shows with 69 kids running around, but yeah, you don't want me. It's going to be boring, guaranteed. I have to if I get up and go to the bathroom right now, like anybody want me to do that? It'll be the craziest last 16 minutes you've ever seen.
Let's
Just
test
watch.
it. Let's test it.
Just watch. Okay, here. I'll be right back, guys.
Let's see if does it work. I think that was his excuse. He just had to. He had to empty. You didn't even go anywhere, Farm.
No. That's why I didn't go anywhere. You never know. It's thinking about it though. It's going to give you that stat, right? Wants to. Go get it, ES. NQ's just going to do dog shit no matter what. This makes this very interesting, right? Into like tomorrow, because I'm going to go to the 30 on NQ and just kind of give it a look myself. I got interested when it sort of rejected last week's VPOC the way that it did.
Yeah, the market knows that you actually have to leave.
Mm-hmm. It does. So, I mean, to me, if NQ stays heavy, like how far can, Dow type names take this thing? It is good for breadth, and that's a good look. Yeah, we'll see.
Maybe they're just painting the tape through the end of the year. They would never do that, right?
Yeah, exactly. Exactly. That's what we're going to find out. So we're going to find out if this goes big rally in the end of the year. If not, I'm looking to sell it.
Hey, that's a podcast. It is a podcast. Farm, you should come to our podcast someday.
Yeah, let's do it.
We talk about trading stuff.
That'll be good fun. I'm down for a podcast. You guys just talk about all kinds of stuff.
I mean, we really try to get into some of the mechanics of trading versus just like, I think a lot of the trading podcasts are honestly, I think, kind of boring. So we try and maybe I don't know. We try to mix in some some strategy, in-depth stuff. So like we did 2 episodes on volume profile, for example, where we went in depth. What a low volume node is, what a high volume node is, what is balance, kind of like auction market, wrapped into it. So I think we've done a pretty good job of making it a little more applicable, I guess, where some other podcasts are just kind of like entertainment value or, kind of a biographical type of content, I guess.
Right. If I do a pod, if you're a guest on my podcast, you have to tell about your shittiest trade ever. Like you're just your biggest screw up. And it can't be like one of those stories where you're like, oh, I did everything right and I was a genius, and then my internet went down and I lost money. Like,
Oh
no,
no, this
like
has to be like a proper
no.
degen.
Oh yeah.
Yeah.
Oh yeah.
I've got plenty of those, man. There's no
Yeah.
shortage.
Yeah.
Trust.
It's just so tiresome. So many of the podcasts that are interviewing big names and talking about all the amazing things they've done, and you never hear about the screw ups. And honestly, we've all had them, and I think we learn a lot more from it, and you can too.
Yeah, and I think it's appropriate to kind of bring some of that stuff to light, because it's like, hey man, some of this shit happens to everyone. Like you're not that special, Like,
Yeah.
I'm sorry.
Not that this is like my juiciest screw up or anything, but last year I did have it right that we were going to get a nice rally into the end of the year, into December. And so I wanted to buy QQQ calls, and it was like, I want to say 510 for January and 530 for March, something like that, which we blew well past, right? But here's the thing, like I had my spot that I wanted to buy, and we rallied. We didn't hit that spot. We rallied it, and it was a breakout, and I was looking to front run the breakout. Okay, it was like a multi-week balance, and I bought I bought the false breakout. I bought the false breakout like an idiot, and guess where I stopped out? Pretty much where I wanted to buy it, and I was just like, you know what? And I knew it too, and I was like, but you know what? I like punished myself. I was like, I bought the breakout like a dipshit when I said that I wanted to buy this dip. So I never even went back in, and I was like, guys, it's these are going in the money, whatever. I'm not buying shit, and I'm just ate my loss, and I was grumpy about it, and like I just had to take my medicine. Like sometimes you got to take your medicine when you screw up.
Yeah,
that was a bad one. Anything IWM, it's going the other way, for sure. So if I ever buy IWM calls, I'm actively trying to top the market.
It's algo time.
Algo time.
Algo time.
Is it going to do absolutely anything today?
Algo time, mate. It's gonna do nothing. Let's watch it rip to nowhere.
First minute, fourth minute, right?
Oh, a little pumpski. That's all it had. When the 50 algo can do basically nothing but go up 10 points.
Nothing but a farm pump.
We're gonna get like an end of day spike. I mean, the stat is there. The stat is there. A lot of buying. I mean, you see the buying just literally right on the candle. That's how you can watch the buying farm. You can just watch the candles.
Yeah, it goes up. They must be buying. They're buying. It's going up.
Sometimes they sell when it goes up and they buy when it goes down.
It's true. It's so weird how that happens, isn't it? So did we really sit in what was like a 12 handle range on ES while I was on here? And
less than that.
Yeah. Whew. That makes sense. Yeah, I don't think we were on here, were we? No. It's good times. It's going to be the range of this candle. It's going to be the range that I was on if it spikes, obviously. 68 to 79, 11 handles. Woo. That's exciting.
Exactly. Hey, but you know what? We'll be on tomorrow morning. I'll be on again with Kane. This is like the Leo tour on Ninja Trader Live for a couple of days. You're gonna get tired of me. But maybe something we'll get some action tomorrow.
Very nice.
Very nice. What's on the calendar for tomorrow, Farm? Anything amazing? I mean, obviously being a bank holiday today, we're gonna get hopefully a reaction from like the real the smart money, as they call it.
Right. All right. Yeah, we'll see what they come in and do tomorrow.
Money.
Hopefully they come in and I don't know. I would like to see either. Let's see if this
6 Fed speakers tomorrow.
Nice. I would like to see 69.20 ES or 68.20 ES tomorrow. That's what I want to see. Anything else, I'm going to be very grumpy.
Are you a golfer being in Arizona?
Dude, I have 4 kids, man. You think I can get away to the golf course for 4 hours or whatever?
Hey. I'm just
I would
asking
like
the chat's
to.
asking.
No,
you
I
know?
would like to, but no, I don't get out and golf.
Are we going to get that new high? Certainly has the potential.
So close.
A new high would be
We'll get it.
encouraging.
A new high would be encouraging for those long. Somebody earlier was long and said he wanted more
Needed it to go up.
buyers. Yeah, needed it to
There
go
we
up.
go. There we go. It'll be
Your
a
wish has
classic,
been granted.
classic
The-
spike for ants on ES. Let's see it.
Thank you, whoever that was in the chat, for bringing that L period set up.
Mm-hmm. Yep. So same idea.
Jeez.
Took a couple of lows, a couple of 30s. Didn't take them all, but you got to run some of those stops before you can juice it, right?
Yeah,
Especially when pace gets that bad and that anemic.
yeah.
Just sits between here. Oh, hour and a half.
Are they going to deny it? I love watching this stuff. Like it's like a show, like an action show.
Seriously though, lately we've had like these, like you can't even call them a spike. I mean, it makes a new high, but it's like 2 ticks,
Yeah,
3 ticks on ES. I just call them spikes. Yesterday was a spike for ants. It was new high day by 1 handle on ES, and NQ was not a spike for NQ was legit yesterday, I guess. Still failed, but ES was 1 handle. Let's see if we even get a full handle here.
no, I think they slammed it right. They slammed it so hard right against 79 quarter that I think that was it. I don't know. We'll see the double down algo.
Mm-hmm. Spike for ants. I guess we got to go fill those singles overnight, huh? I don't know. Maybe
Here we
I'll find myself
go.
short tonight.
What is Aqua gonna do?
Oh, purple levels. I just put these on here for you guys to see my weekly levels. So, and I like to do ranges as opposed to single levels. Tends to keep people, I find, out of trouble. You know, if you use a single level and you're like, wait, is this a reclaim? Because a couple of 1-minute candles close over it. But, when you're looking at a range and you can see it obviously failing into that range, it's a little bit easier to stay out of trouble. So that's all they are. And it could come from anywhere. Either volume profile, market profile, concepts, supply and demand of price for me, or whatever I see as a key inflection point on a given week coming into it.
Yeah, that high day is
Yep.
gross.
Yep, spike for ants.
But
That's your classic spike for ants.
They sold right into it. So I mean, there were sellers ready. They were waiting.
Oh yeah, and there was your NQ right up in those 680s. Huh?
Yep. Yes, sir.
All right, let's just do the same thing as today. Let's just sell it off overnight. At least fill in these singles and then probably just rally anyway, right?
We know Farm's plan. Farm's going to be short tonight.
Probably. This is like the most disgusting looking 30 minutes. like this 30-minute chart is so gross. Just looks so gross.
Proper return to the meat of the day session. For the nothing ever happens crowd, we're about to be nothing ever happened here. Yeah, because we hey Jim.
Hey, boys.
What do you think? It wasn't much for us except for this little end of day move, which, you know,
I think you guys did great.
you have to say that.
It's in my contract.
Yeah.
Mhm.
Well, it was
But,
relatively, I mean, it was,
but Jim, did you like the stream?
I did like the stream.
All right, because you know, we know your history there is a little sketch.
Oh my gosh.
Yeah.
I've been virtually perfect since the incident.
Okay.
I might
I'll take
even
your word
like the
for it.
next stream. I might even like the next stream now for tomorrow.
Well, you have to like it tomorrow too, because I'm gonna be, I'm gonna be on with Kane tomorrow morning.
You are. While we're waiting for this to settle, look at that selling off a little bit. Spoos are kind of, someone's
Yeah.
taking profit right now.
Yeah. Yeah, they sold pretty hard
Mm.
into the 77s and ES there.
Yeah, it's a little bit backwards. So I said fill the singles, then go spike up. It's like, no, I'll do a spike for ants and then we'll make a race for those singles. It's not going to make it, I wouldn't think. But yeah, this will be your first area of interest overnight. I would think. I don't love how on the weekly profile it's sort of sitting in this sort of the middle of this high volume area here. Don't really love that. So I don't love to interact necessarily as much in those singles. Maybe here.
Yeah, there's
Maybe I
nothing.
like.
Oh, there's nothing after hours either.
Let's go. Let's call it 52 and a quarter, 52 half. I'll consider that spot if I want to get long overnight.
Oh, the VWAP or the VWAP, depending on how you pronounce it, right now for the session is 68.54 and a half. I don't think we're going to get there now.
No.
Here we go. That's the bell, gentlemen.
It's quite the 30-minute candle there. I'll treat that as a box. That it's kind of just takes out the range of however many candles to the left. It's kind of a big mother bar. So if we take that out, dip into the singles and reclaim, I'll look for a long. If we take that out to the upside, fail back in, I'll probably take it short, at least back to here. There's your 6 p.m. trades.
I have a feeling we're going to see more and more of these days in the future. I mean, we have energies are all green, treasuries are all green, metals other than Dr. Copper green, dollar unched, equities pretty much unched, relatively speaking, and the Bitcoin not doing so well, down 3.04% on the Bitcoin at 103,000.
Yeah, I mean, I feel like it needs to hold 102 roughly. I mean, or it's kind of lights out here. It looks pretty bad. Couldn't even get to that 108 test. I wanted to see what was up at around 108.2, which I figured was probably going to stop it. It couldn't even make it there. Such a bad look.
Yeah, John Carter on X is like, I'm waiting for the flush, and I'm a buyer at 80,000.
69,420.
All right, I've
Market.
got a bit of a situation. I've got to run to pick up the little one from school. So,
All right, awesome. Guys, thank you so much. Appreciate you. Let's get some last second thumbs up for these guys and some subscriptions. Appreciate their hard work this afternoon. Great job, gentlemen. Before we go tomorrow, we're starting bright and early again, 8 o'clock. Jay Singh is going to be in the morning gap with us first thing in the morning. And then Pax is going to be on Tape Talk. Kane and Leo coming back for the morning, trading the open in the morning. Nick is going to do midday markets tomorrow. And then at the end of the day, Nick and Joey. Joey is back in the afternoon to trade the close. So, gentlemen, thank you for your time. Really appreciate you today as usual. Thank you, chat. Thank you, community. One last message, please. Most important message of the day. Please be safe out there. Be good to each other. We will see you tomorrow.
Thanks, Jim. See you, Chad.
Take care, Jim.
Bye.
See you, Leo.